two, 1, 2, 3, 4.
All right, good morning. How y'all doing? I hope you guys are having a wonderful morning so far. Being here, my name is Joe Roca, Managing Director of Commodities and Equities here at Zibbler Trading. Today is Friday, March 25th, 2022, 8:20 a.m. And I have the pleasure of hanging out with you wonderful people for the next 2 hours. So we are broadcasting on YouTube today. But for those of you who are new, let me give you a quick tour of the room. And I'll do this fairly quickly, but you should be able to follow along. Comments, questions, concerns. We have an amazing support staff, absolutely top notch, and they can answer all of your questions without hesitation. I might be setting them up and for a tough time, but they are spectacular. So please ask questions, and we will get back to you. I can promise you that. So, all right. So what are you seeing on your screen right now? So this is going to be the main setup that I will be sharing with you. And some of you were with me yesterday afternoon, so this will be old hat for you as well. But again, as a little refresher, here's what you're seeing. All right. So I've got 3 charts up. I have the S&P chart right in the middle, the NASDAQ, or excuse me, the S&P is on the left-hand side of the screen, the NASDAQ chart right there in the middle, excuse me, and on the right-hand side of the screen is crude oil. All right. Again, that's S&P, NASDAQ, crude oil. So I will be toggling and showing different products at different times, but this is, again, kind of the standard setup. Okay. And this morning I will be trading futures. Again, that'll be trading futures. All right. I know there's been a lot of options and stuff, so we're going to give you a look on both sides of the curtain here. My apologies for the ambient noise there. We'll make sure to keep that. We'll make sure to keep that at bay. But again, I'm going to be focusing on futures today. Okay. I'll also be calling out trades and executing live right here in front of you. It'll be super awesome. And if you are trying to follow along, of course, you can hear all of the calls that I send out, and you can also see my position on the screen. Okay. So let me see if I can blow this up. I want to get it to be too overwhelming, but all right, that's a little bit bigger. All right, pal, beat it. Okay, there we go. That's a little bit better. All right, so the horizontal blue line, that is my entry point. Okay, that's my average entry. So you can see here on the upper left-hand corner of the screen, again, this is S&P with the ES. I'm short 3 lots. Okay, so I sold 3 lots, and my fill price or my entry price is $45.26. All right, so as I sold 3, I then need to buy 3 back, and I'll be doing so one at a time. All right, so I am 18 bid for 1. I am 8 bid for 1, and I am 88 bid for 1. What does that mean? All right, so I've got a horizontal green line here, 45.18 bid. Okay, so I'm trying to buy one of my 3 lots back here at 45.18. I'm trying to buy another lot back here at 45.08, and that third lot trying to buy it at 44.88. Now, if this trade flies up against us, I will get stopped out. So these green lines to the top are where I will buy that if it goes against us. Okay, so right now this trade is $375 in the money, right? But that money has not been captured. That money does not really exist yet. If the market can still turn and stop me out, and I could take this for a loss. Okay, Now, if you look over on the right-hand side of the screen, this is crude oil. All right. We are short one from 109.65 with a target down here at 106.5. All right. And our stop loss up above at 110.70. Right now, this position is down $200. Okay. If you were with me yesterday evening here in the futures room or following along on YouTube, you will recall we shorted the crude oil market at, I think we got in at about 112.40, give or take. In fact, I think I actually sent out an alert to you folks. Oh, no. We got in at 113.24. Babooey. Okay. And our first target was 1065. Even better. Okay. So how does that work? How do futures pricing work? At 8:26, I got like 2 minutes to go through this. But we sold 113.24s. Okay. And then we bought one at 110.65. That's $2.59. Okay. So that is 259 cents, right? Each penny in crude is worth $10. So that's 2.6 thousand bucks. Now we did it twice. So that's 5,000. Okay. And we're still working one more bid down there at the bottom. That's if you kept it from yesterday. Now, if you then added on this morning and stuff, your P&L is going to be a little bit different. It would actually be higher. And because the market's lower than that 1065, you'd actually be up another grand at least. So you'd be sitting more like 6.5K on that 2-lot trade. Okay. Now on the S&P, I'll do this real quick. We sold 26s, right? 45.26. Now if the market breaks and we're filled, all these fills, right? We'd pay 18 for one, we'd pay 8 for one, and we'd pay 88 for one. So let's take off 12. So our average fill would be 45.05. All right. If all three of these were filled, 45.05. So we would take our 45.26s where we got in minus our 45.05s where we get out. That's 20 points, right? In the S&P, each point is worth $50. So $1,000 per lot. We did it 3 times. That would be 3K. Okay. All right. Now let's get focused on the task at hand. And somebody decided I was sitting too high. What was the swing low there in S&P? All right. I set out an S&P trade earlier as well. I'm going to just go ahead and take a fill. So that's a T1 filled at 19.5. All right. So we were just 18 bid to close out one of our 3 S&P lots. Okay. Market broke to about 19.5. So I just paid up to get to reduce my position, lock in a bit of profit before the open. Okay. Again, locking in a bit of profit before the open. And that was a fill of 45.1950. 45.1950. Market currently trading 19.25. Right. So you can get the I'm going to go ahead and flatten up crude for now. So what am I eyeing at the moment? I'm currently eyeing a short in crude. I'm looking for a rebound trade. Okay. We've been taking CL to the downside for a while now, and we've been making a ton of money doing it, right? So we'll see if we can find that pattern again and identify a good place to get in and to get short. All right. Now, VWAP, or the volume weighted average, is up here, and that is this blue line. Okay, this is the teal line that you see here, kind of meandering its way down the screen. The value of that is up here at 110.65. 110.65. So I will look to sell the crude up at that level. Now, I'm not going to place resting limit order we're in at the moment. Okay. I want to see what happens on the equity open right now and see where the NQ goes. Okay. Why do I care where the NQ goes if we are trading crude? What's the difference? Well, there just so happens to be a pretty good inverse correlation between the NQ and the CL, or the NASDAQ and crude oil. All right, so we're going to go ahead and use that relationship for a lead lag correlation indicator, i.e., if the NASDAQ pops, we're going to look to go short crude. Okay, easy peasy, Japan easy. Now, apropos of nothing, the CL is moving pretty fast, right? So to say this with a degree of hubris, we certainly want to be all over these ratios and these correlations, right? So it's also important when we are pontificating our strategy and our plan that we thoroughly analyze each of the markets and each of the relationships within those markets. So when we're trading this whole kit and caboodle, we can accurately assess our risk per trade and assess the probability of each of these particular trades. Okay, now we had a dip there in, you know what, let's move our stop loss up in the S&P to break even. Okay, S&P stop loss break even, let's get that out there. So yes, stop loss, let's bump that to 45, 25, 50. Okay, 45, 25 half. So let's bring that stop loss in. Come on. Now, again, I put on an extra lot. The signal was for 2, right? The signal was sell 2. Signal was sell 2. I did 3. I put an extra one on there. Okay, so the next thing that I want to convey is that I will often call out these trades and these positions with 1 to 4 lots per trade. Okay, my average position is 2.5 lots. Now, of course, you can't sell a half lot, but let's say 2 or 3 lots, right? But on occasion, I'll say, all right, 2 lots is, we're going to do 2 because the probability is not spectacular on this trade, and I want to reduce the magnitude of our dollar risk amount. Okay, the magnitude of our dollar risk amount. I will then follow that up with, all right, for those of you with larger accounts who have a slightly larger risk appetite, I'm going to throw on an extra lot with this target and this stop loss. Okay, because everyone has different risk appetites, right? And I will generally always take the most aggressive stance, like with that extra third lot, simply because the risk management, P&L, strategy, etc., it's mine, so I'm comfortable with it. I've done it before, and so I also like to have the ability to display everything for you guys. The only place where it would get confusing again, if I said sell 2, and then just now I have a 3 lot on the screen, right? But I will clearly say what the targets are. Like, for instance, we sold that S&P, and the signal was sell 2, right? The signal was sell 2 at 26. And then we had 2 targets. 18 was our T1 and 08 was our T2. I followed that up with, if you want to add a little risk to the honeypot, go ahead and sell a third, and your target will be down here at 88. Okay. Whew, it's getting hot in here. Right, pal? Okay. So that rebound trade is coming to fruition, right? We want to be selling crude. But what did I just talk about with respect to selling crude? We talked about the NQ. What's up, Stevie? What's up, Mike? You like that highlight reel? We're looking to sell the CL here, but because the NQ is falling and falling so hard, you're fine. You're fine. Sit. You're embarrassing me. Because the NQ is falling so hard, we want to wait and see how that inverse correlation pans out before we just dump risk into the crude market, right? Because the NQ seems pretty soft right now. Okay. Now, for those of you who are in the futures room, have heard me on the mic many, many times. From those of you in the strike zone room, of course, you've heard me on the mic many, many times. For those of you on YouTube, obviously this might be one of our first encounters. And I did a live session last night at from 7. I did kind of an ad hoc session from 10 p.m. or from 7 p.m. to how late were we up? 10:30, nearly 11. And the members of the strike zone took the liberty of making fun of me and pointing out all of the common expressions that I use. And just a moment ago, I think I fit 8 of them in a 60-second period. Okay. 8 of them in a 60-second period. And if you're in that other, I don't want to confuse anyone, but if you're in that other service, I send out an alert saying, hey, I'm on the mic, ad hoc session. But let's keep the focus here in the futures room. I just thought it was funny because they were really giving me a hard time on it was great. If someone could compile a list, that would be great. And we'll see if I can just get them all in like 3 sentences. Okay. So back to the task at hand. Our S&P trade currently seems to be working. I kind of want to give the CL trade a shot with like a 40-cent stop. Where's it trading right now? 30. Yeah. All right. I'm going to drop a short in. I got a bad fill. I want to sell crude just once with like 40-cent stop. Ideally, we'd get a fill at $1.1040, right? Just risk 40 cents. We'll stop at a $1.1080 at 1080, and then we'd have that same familiar target below at 106.40. Now, one of the nice things about the style I use to trade is that the targets that we use are going to be consistent. What does that mean? If we are looking short last night and we're looking for a downside target of 106.40 and we get stopped out on a pullback, and then we look to re-engage in that same trade from a better, higher price, we're going to have the same target, right? Because the level and the value of that level has remained the same. Nothing's changed, right? So if you are trading with me, and you will start to get very familiar with these targets, okay? And so you can write them down, or they'll be sent out to above, okay? All right, come here. Okay. All right, S&P, moving and grooving. And then if I have any kind of official alerts for the rooms, or for this is for just a reminder to the Strike Zone folks who are listening, and this will be the last time I refer to you, but I just want you to know if there's an official alert, that will come out in the Strike Zone alerts box, okay? And I will very, very clearly state that, as I always do, okay? So don't just follow all these verbal alerts with the knowledge that they are going to go into the book, because they won't. Okay, so let's focus on futures room here. Just wanted to clue them in because they're watching as well. Now, one thing I do like to say, especially to new traders, and especially to the folks who are kind of checking out these rooms and getting familiar with the different content providers and such, is make sure you enjoy yourself, right? If you're not having fun, then go do something else, right? So take the knowledge from everyone, and my opinion is to I always say follow as many people as you can and get as much information as you can. That's kind of my philosophy, and that's what I like about Simpler, is we have so many different viewpoints, right? When it comes to execution, that could get a little challenging to try and follow everyone's strategy, but I suppose it's a bit of an unnecessary tangent for me to even broach that subject. But at this point, it's Friday, and you traders have heard from a lot of people, seen a lot of people, and you will have noticed we have different styles, right? Not everyone trades the same. Not everyone has the same viewpoint. But when I was learning how to trade, right, I was in, and then I'll do a 15-second bio. So I started trading in Manhattan. I was on the NYMEX. I was trading crude oil, right? So I was exposed to hundreds of professional traders, thousands of professional traders. So I had the pleasure and the fortune of being able to learn from everyone and then form my own style, right? And that's what's nice about Simpler, is you can learn from everyone and then form your own style. That's not everyone's philosophy. I know that. But I like being educated, and that was my trading education, right? It was my job. It was, so I didn't really have a choice of whether or not I was going to get educated, because I was. So again, that is my recommendation. Again, it can get a little bit confusing. Not everyone has that same or will come at you with that same vantage point, but I think that's the best way to go. Personally, but take that with a grain of salt. You know, I'm doing that based off of my experience in the salt mines from the institutional side of things. Obviously, retail side's a little bit different, but try and soak in as much information as you can, and for Pete's sake, enjoy yourself, right? For Pete's sake, enjoy yourself. Otherwise, and I do apologize for the Pooch. He really does have the zoomies today. He will calm down shortly. So, okay, bud, you need to be quiet. Okay. And no position. Well, okay, no new position right now. We are simply. Oh, we could. Let's see. What's the swing low there? All right, failed low. Let's buy a one lot in the NQ. We can do that as a hedge against our S&P short. Stop loss on this. Stop loss is a little wide. Let's pull it up let's pull that stop loss up to 24. Okay, so that's buy one NQ market price. My fill is 747. Let's round up to 748 because I'm not flying a jet. And our target on that will be 787. All right, so we'll risk 20 points to make 40 points. So if we get a quick knockout, that's fine. What we're doing is looking to see, all right, there was a failed run at the low there, and as of 8:45, it's a good time of day if you're day trading to kind of identify a volume exhaustion, right? Where sellers kind of run out of bullets, they're done hedging, and then that's that. Okay, so taking little shots at the market like this, especially on Fridays with one lot, tight stops, etc., can end up being pretty profitable when we are able to string together a few one lots, right? So for those of you who are new, and give me 1 second to close this door. For those of you who are new, it might seem like I am giving you a lot of information all at once, and it might appear as if there is a very steep learning curve to my methodology. And I would say that, and I'm going to sell one CL market price. Okay, I'm going to sell one CL market price, and my stop loss is going to be 11.10. My stop loss is going to be 11.10. All right, our NQ trade's coming to fruition. That's up about $400. So if NQ rallies and then strikes owners, let's all get in on this. Shoot, sorry. I don't want to be dictating that. My apologies. So I'm going to go ahead and type this thing out, and I'm going to give it to everyone, but it will be an official trade for whatever that's worth. And we're selling one CL market price. My fill is 1065, currently trading 1060. 1059, 1068, right? So it's going to bounce around. So we're never, well, not never, but we're rarely going to have that exact same fill, okay? Now what we're doing is I'm taking the money we just made in the NQ, what we're about to make, and let's go ahead and close that out. Our target, well, we could actually lift it even. All right, I'm going to give you two options. Option number one, which is what the book says, is close out this NQ trade for for a $500 profit, and take that $500 and put it and assign that risk capital to the CL. Okay, assign that risk cap to the CL. That way, if we sold 1065s and then we get taken out at 1115. We will have lost. All right, I'm going to do that. That's what the book says. So I'm going to, there we go. Work it properly. Okay. Now, our target, and this is kind of what I just mentioned before, right? We have the same target down in crude that we had from yesterday. Okay. That target is going to be 106. That target's going to be 106.40. All right. So I'm going to go ahead and fence this thing up with a bracket order. And when you look at my screen now, okay, you'll see horizontal blue line on the right-hand side of the chart, and that is where we are short crude from, 1065. Our stop loss is 1115, and our target is 640. Now, you will notice when I'm reciting these prices, I am not saying $110.65. Stop loss, $111.15. Target, $106.40. Oh, I just did it a moment ago, of course. But when the market's moving quick, I will do the following. All right, sold one at 1065, target 640, stop loss 1115. Okay, so the only, so the objective there is efficient speak, right? So when we're down on the floor or we're trading OTC and I'm doing thousands of lots and hundreds of trades and I'm making markets in the CL, the HO, the RB, and within all of those, I'm making markets in flat price, spread, making markets in derivatives, options, future strips, right? Q1 strips, Q2 strips. The amount of information that you have to process arguably is challenging enough, but it once you do it, once you do it for a while, it becomes second nature, which is not to say it's simple or easy, but it takes hard work like anything else. And then once you got it, you got it, and that's that. But where I'm going with the price dictation and the efficient speak is we leave off the handle so we can simply get the price out quickly, right? So if I say 1065 in CL, everyone's going to know I mean $100, $110.65, right? They're not going to assume I mean $10.65, $100 lower, because there's not a very good chance that gets filled. All right, or even come to fruition in the entire year, much less the entire 10 minutes, right? Okay, and then futures, folks, there's your alert typed out above. Now, I would like to point out we are still in the ES trade, barely. Kind of the opposite of yesterday, where we got ticked out of two positions that resulted in almost a 10K swing. Due to the risk we then didn't initiate. But so that's also something, it's also a good little lesson or thing to point out for those of you who are new. Of course, those of you in the futures room know this already, but as a nice reminder, right? If we get stopped out of a couple of trades for either small losses or small wins, we're going to we are going to, that is a permeating syllogism, Alex. Thank you for that. I lost my, someone just goes, I've been a simpler for a while. I'm used to drinking from a fire hose. Well said. Well said, son. I lost my train of thought. What was I talking about? Anyways, so if we take a couple losses, that's fine. That's not a big deal. But it's really the opportunity cost of those losses, because we can't put on the subsequent trades and risk. You are eyeing this like it is a steak, my friend. So that goes in your toy chest, and now you're done. Okay. No, I don't always have the camera on, but this go on in the background. Okay. Hey. I did buy a fiddle because someone said, I doubt you can do all this and play the fiddle. Now, the fiddle was battery operated, so I just pretended, but I did hit play. Okay. So we will be ready to get stopped out of the S&P trade at 25.5 and the CL trade at 11.15. So when you put a trade on, or at least when I put that trade on, we elected to, like for instance here in crude, we elected to risk $500 on this trade. right? So when I put the trade on and I spent that $500, it's gone. It's never going to come back, right? That's what I risked, okay? So that risk is gone. But there still could be a reward. You never know, right? And in this example, to be accurate, we did make $500 on that little NQ trade, right? So the $500 we made on the NQ trade, okay, that's great. But we did that NQ trade to try and pick up a little short-term risk cap. And then we're taking that risk capital, right? So we're taking that profit from the NQ, and now we're risking it in the CL, right? So the way I would view this trade is if the CL trade gets stopped out and we have a $500 loss, well, that was offset by the NQ. So net on those two trades were flat. So that's pretty sweet, right? Now, on the other side of the coin, in the event we are fortunate and we sell these 110.65s and we buy these 106.40s, we'll have made $4.25 or 425 cents, right? Each penny or each cent in crude is worth $10. So that would be $4.2 thousand. So at this juncture, we're risking zero to make $4.25 grand. Pretty neat, right? Now the S&P trade, again, we sold 26s. What's the handle on that? 45.26. What did we buy? We bought 45.19s, 19 halves. Okay, so just to make things easy, easier, I'm going to always round up or round against myself. Because we're not always going to have the same fills, so I'll kind of sandbag all the risk reward ratios, and we do that on purpose. We skew them against us in the event we have to, and I'll explain why. But we do that and I'll come back to that NQ breakout. But we're short the crude. So we could. And that would actually be a good hedge, right? Because we're expecting them to move inversely. So if we sell, all right. So the following is not, the following is just a verbal alert for the screen here and nothing else. All right. But let's sell one NQ market price. Okay. We'll sell one NQ market price. All right. Now our target on this, I believe, is, let's just slap one in down at 655. And let's put our stop up at 745. And then I will check my support resistance HVAs to confirm those levels. Let's actually go 750. Okay. 750 is okay. I guess when we put that on, and then 640. This is not a good trade off the bat. We're selling too close to an HVA node. There's going to be support between 720 and 700. Okay, and we're selling right in the meat of that. Not my favorite position here, but we can afford it, so let's do it. So futures room and futures room only, I will send this trade out to you. Okay. Again, so my fill is 712 spot 75. I'm going to send this out. I'm going to round against myself a half or one tick, which is $5. Mainly so I don't have to type all of the decimals out, because I'm not recording this anyways. So what's the difference, actually? So scratch that. When I'm in a different service, we are accurate to the tick, but here in the futures room, as long as you have the approximate levels within a couple of bucks, you're all set. Okay. So for those of you who are new, right, and you see, I don't believe you have access to the type alerts right now. Those will be released to you, I believe, after you sign up for the trial. Come to the trial so you can see all the written stuff. Otherwise, we're not going to share it with you. No, that's obviously a joke. We have fun. We keep it light. But no, there's a very crystal clear rationale behind that. And it's because we want you to gain some experience before kind of coming in and following this in a fast market. For instance, if I say sell the NQ and you buy it, and then you're waiting to see what the targets and alerts are, and it tanks, and we're short, but you accidentally bought it, that could be a very expensive proposition. Or mistake. All right, let's also move the CL stop loss down to 1075. CL stop loss 1070. So let's bring that down to break even. I'm typing up a futures alert. We sold one at 713. Our target's going to be 635, and our stop's going to be, we can actually go a little tighter, 745. So let me get that out to you, girls. I mean, the strike zone is my mastery service, so obviously, that's where I'm going to be the most. But here in the futures, what you get is more like day trade stuff here and now. So we're gonna focus on the futures room today. I am not. That's what's important right now. In the futures room, I guess if someone could PM if they've got questions like that, so that way I can do my YouTube job today. The YouTube job. This is fun. I like this. More audience. More performance. Okay. As you can tell, I'm a very shy individual. And it's really hard for me to do this. I prefer to just trade alone in a cave with no one to talk to, obviously. So I'm really stretching my personality to be working with you folks. So please, I would prefer a great deal of praise and I can't even say that with a straight face. Wait, is it backwards day? Wait, what? Who is this jerk? Okay. That fudge. So new low in the NQ, but failed at 690. Right. So that moved 20 points in our direction. Okay, but nothing happened. We did not close any profit. But what was that? 20 points. And the NQ, I've only P&L'd one of these out, right? So 20 points in the NQ at $20 a point is $400. The position on this was one lot, so just 400 times one, that's 400. Okay, now it's come all the way back. It's come all the way back. Okay. And it's gonna bob around like that. Okay, it's gonna bob around like that. And I would also like to point out the fact that we are still in this NQ trade. Okay, so as I mentioned, I'm going to be kind of going over all these prices over and over again, just for the sake of for the sake of repetition, but for your own edification, right? So we sold 45.26s in S&P. We then bought 45. We then bought for Joseph 45.26. We then bought 45.20. 6. Hold on, calculator. 45.26 minus 45. If I was executing elsewhere, I would have just made several $100,000 worth of typos. Fortunately, I'm just doing a calculator in front of you folks. All right, so 6 points, right? We made 6 points on that one lot. Times $50 a point, that's $300. Okay. Now the tip to toe movement on that is 45.26 minus that swing low of 45.14 is 12 points, right? So at one juncture, that S&P trade was up 12 points on that second lot, or 12 times 50, plus the $300 we had earlier. So 900. Okay. All right. Looks like we're going to get kicked out of CL at 110.70. No big deal, because that is break even, right? We sold 65s, 110.65. And if we get stopped out at 110.70, that's a 5-cent loss, right? So in crude, 5 cents or each penny is worth $10. So 5 times 10 is 5 times 10 is $50. Okay, we did that one time. So 50 times 1, of course, still $50. Okay, so we will have lost $50. That said, we made 500 in the NQ, approximately. I think it was quite 500. We sold 72s after having bought. No. Let's just say 250. I don't remember our exact fills. Well, actually, I do, but neither here nor there. Let's say we made 250, right? Minus the $500 we lost in CL. Now we haven't lost it yet because the trade's still active, and as a matter of fact, we're actually up 500 in crude, right? So this whole thing, this whole kit and caboodle, is up 500 or 250 from the NQ plus 500 from the crude. Now, so 750. Now, for those of you who are new and are like, what in God's green earth is this guy talking about? The market's moving super fast. I don't love math and I don't like keeping up with all this baloney. Well, due to market conditions and due to the fact that there is a huge war, the market's moving pretty fast. And this has actually been the case for at least 3 months now. And it's more so on Friday, given the fact that this is the last Friday of the month. Today had the potential of being brutally awful. Fortunately, we're hanging in there. Now, why and how we're hanging in there, I'll circle back to that later. But I'll put a pin in that and circle back to that later. Is someone getting all these? And we'll see how this turns out. Okay. So the point is that the market is moving very quickly, right? And so the YouTubers who are brand new, you have the unique opportunity to see 2 days worth of trading in 2 hours, right? So don't I don't want to mislead you and have you be under the impression that it's always this obnoxiously fast and quick. And I'm not saying it's I don't mean to and I'm not trying to be insulting and say that it's hard to follow. But I guess I would speak to those who are, I guess it would actually be selling myself, because if you think this is hard to follow, don't worry, still buy it, because it's not usually this fast. I suppose that would be one way to interpret my comments here, which is, of course, silly and not at all my objective. But when support calls you later, that would probably be their objective. And we'll see how many slaps on the wrist I get later. I'm just kidding. Awesome group here at Simpler Trading. I've been here 2 years now. Absolutely love it. One of my favorite companies that I've worked for in my long and indistinguished career. Anybody? Can I get an LOL? Indistinguished career? No, nothing. I find self-deprecation and humor to be enjoyable. Okay, back to the task at hand. So, I would, in all seriousness, say it's a kind of a cool, unique opportunity for those of you who are new and the YouTubers who are watching, that you can see a lot of action, a lot of activity, a lot of trading, and I'm actually calling out signals. I'm actually sending you trades. I'm actually executing in front of you, so you can kind of see all of it live and in real time. So you can see how the P&Ls are achieved, and you're not just reading an email. You're not just reading an email from me sending out, hey, I made 10 grand today and that was awesome, and you're saying to yourself, well, did you really? But if you look at those CL trades we did last night, like those positions, and in the interest of what am I looking for? Compliance. They are $10,000 worth of alerts, not trades. I think I forget that. Anyways, circling around the drain here. See, I work from home, so the big hook that they'd use to pull me off the screen is a bit more of a metaphorical one. It'll just go silent, and there'll be one of those funny little cartoon TVs with like the lightning bolts off of them from the 50s. Anyways, huge tangent, silly joke. Okay. What else did I have for you? So nothing right now, right? We're still short of one lot in the S&P, and we're short of one lot in the CL. Where we go from here. Okay, this brings up an interesting situation. And this is, okay, so this precise situation, what we're seeing right now, has been one of the challenges in March, because we are trading in the middle of these ranges, but the move to the upside and to the downside of these ranges has been quick. I mean, the market's been open for 45 minutes, and the NQ, let's see, 830, broke from 780 to 715. right? So it moved 65 points. And then went from 715 back up to 775. So rallied 60 points. And then it went from 775 down to 690. Oh, we got stopped out of that NQ short too. Damn. If you move your stop, I believe, what was the stop I sent out? 745. Crap. I had that was at 755. And I pulled it into 745 because by the time I had finished typing up the alert, it had made a new low. Yeah, that's unfortunate. Okay. Lee, should I reload the room? I think you told me the other day that I know. Okay. So on that NQ trade, I would like to point something out. So when I originally typed up that thing, our stop loss was at, actually, let's do it. Let's take a look at it. We sold, again, 17/13s, right? The original stop was at 14,755. 14,755, okay? So that was our stop. Now, having bought 14,712s, right? So getting stopped out at 755. So 755 minus 712 is 43. Okay, so we lost 43 points on that NQ trade. Each point is worth 20 bucks. So we lost 860. Each point is worth 20 bucks. So that's 860 times the number of lots we had on. It was a one lot. So of course it's still 860. So that trade lost 860. Okay. Everything else has been a winner or will be a scratch. Now, for the YouTubers who just joined us at 8:20, if you weren't with us last night and you had that 7K alert, then you'd be about a scratch, depending on where these next two trades go. Or no, well, because we had the $500 NQ win, right? No, I believe I downgraded that to 250. What are the exact fills on that thing? Oh, I did get 87s, right? So we got, and I got in. This is rare. We bought 47. Okay, here. No, we bought 47s, 48s, and sold 72s. Okay. Yeah. So our sale price on that NQ long earlier was 14,772. Okay. Our buy price on that was 14,748. Okay. So 24 points times $20 a point is 480, which is why I kept saying 500. And then the loss we just had was 860, right? So the 860 minus the 480. So in the NQ on both those trades, we're down. Okay. Now we also made 300 in the NQ or in the S&P on that one lot, bringing our P&L to minus 80. And then if either of these trades get stopped out or both of them get stopped out, those are about break even. One will be a little in the money, one will be a little out of the money, but they're offset. So the P&L would be 80 bucks to the downside. All right, so just got kicked out of our last S&P trade. Now, in the event you elected to put on that extra lot, you might still be in that kind of extra optional bonus slot. The bonus makes it sound like it's a freebie. It's not. It's the opposite of a freebie. It's extra risk. So, yes, stopped out. 45, 25, 50. Okay. Cool. All right, we're all set. All right, 9:20. So I've been on the mic for an hour now. I lost my voice last weekend, so I am powering through it. So let's take a 90-second break. In the interest of copyright, I will not play a little song. I generally do that, but I think because we're broadcasting, I don't think I'm allowed to do that. Or perhaps I should not. All right, so yeah, so let's take a 90-second break. Get some coffee, get some water. I need to rest my voice a little bit, and then we'll be right back. Okay. All right, sun came out. Beautiful. Okay, I am back. You guys should see my screen, hear my voice, and see my face. We good? We get an XOXO. That would be wonderful. AV check. All right, thank you. Lee, I was really talking to you. I much prefer an XO from you. Makes me feel warm. Okay, so we are still in this crude oil trade, and like I said, knocked out of the S&P trade. I was knocked out of my extra lot, I think, right as I was getting off the mic. Now, we will take one more break before we're done at 10:30. I've got 130 minutes on the mic. My voice is already starting to go. So we'll do one more like 2.5 minute break later. So it should be good to go at this juncture. All right. If the NQ pulls back to its VWAP, Normally, I would look to buy that and take it to the upside, as we are in an uptrend for the day. But CL's not really moving. Yeah, where you could, I mean, you could add 50 CL at 10.50, right, and just risk 20 cents on that, and then look to make it, and look to take it off and freaking in like increments of 50 cents. Or you could add at 109.70 if it breaks hard. But right now, it seems we're just kind of teeter-tottering in the center of this range. The NQ just traded through its VWAP, not by much, but so the ES is up 16 points on the day. The YM is up 200 on the day. The Russell is up 2 points on the day. When I mentioned the NQ, it was up 10 points on the day, right? So that's why it's an uptrend, because we're up, we're rallying, we're green, we're positive. Okay, don't overthink it. Just look at the color. Let's look at the colors. Green, uptrend. And there you go, right? Okay. Okay. Audio. Okay. If you notice me talking and sending out alerts, if we could get that note over to me a little quicker, that would be great. We are long a one lot in the NQ. Okay, we paid long one. We bought one, and we paid 58. 58. Okay. So what are we risking on that trade? 758 minus a stop loss of 730. So we'd be losing 28 points, right? 28 points times $20 a point is 560 bucks times the number of lots we have on, which is one, of course, 750. Okay. We now look at that crude trade. What's going on over there? Well, we sold 110.65. Okay, it's now trading 109.85. Okay, so that's $0.8 or 80 cents. Each penny or each cent in crude is worth $10. So that's 800 bucks. For one lot, we have, so 800 times 1, because we have a one lot on, is 800. Now, this is an unbalanced trade. Why? Because they are inversely correlated, right? So this could end up being a very profitable trade if the inverse correlation stays intact, all right? So if we sell 14,830s up here in the NQ and our target is lifted after having bought 14,758s, that will be 72 points we made in the NQ. 72 points times 20 bucks a point is 1.4K. All right, keep that in the back of your mind, 1440. Now, if this trade comes to fruition here in the CL, we had sold 110.65s. If it breaks all the way down to 106.40, that'd be 110.65 minus 106.40 would be $4.25 or 425 pennies. Okay, each penny or each cent or each tick, however you want to define that, said terms are interchangeable, are worth 10 bucks. So that would be 4.2K. Now, if the NQ trade works as well, that's 4.2K plus 1440. That would leave us at 5,690 bucks. Our risk on the CL is 50 bucks, right? Because we paid for that risk in the NQ. All right. The risk on the NQ trade is, again, 58 minus 30, 28 points times 20 bucks a point is 560 bucks. Plus the $50 risk in crude is 610. Okay, so we're risking 610 to make, what was that, 5,500. So we're risking about 600. Let's round down. Or again, always round down or against yourself. So we're risking about 600 to make about 5,000. 600 divided by 5,000 is 0.12 or 1 to 8. 1 divided by 8 is 12.5. Okay. Or you can just say 1 to 10. 0.12. 1 to 10. But again, I always like to round against. Make life easier. Okay. Mark says, don't mind me reading. And actually, it's actually germane to what I said earlier, is that today is market's been open for 64 minutes. And Mark said, boy, it feels like 3 hours. If you don't mind me quoting you verbatim. Well, you said 1 hour. And to the YouTubers out there who are watching and hanging out, right? And so one of the advantages of having me on the mic here on Friday morning is I'm going to give you lots of trades, lots of positions, lots of metrics and ratios and this and that and et cetera, et cetera, et cetera. Normally it would take 2 to 3 days for all of this stuff to pan out, but it's all done in an hour, right? So if you do rewatch this video later, and you can pause it, right? Check out what's what and see what's going on. And that way you can take time to pause the video, check my math in the very likely event I made a mistake, but actually it would be extremely unlikely because with the risk of hubris, I'm okay at at mental math on the fly. Okay, so what's going on right now with this position? All right, the NQ is trading 790. We got in at 760, or let's call it 759. So that's up about 30 points. That NQ is up about 30 points. The NQ is worth 20 bucks a point, so that is up $600. All right. The CL trade, we sold 1065s or $100 or $110.65. That's currently trading 109.40. Actually, it just popped to 109.50. So it would be that 1065 minus that 109.50. That would be 115 cents or 110 pennies, 115 pennies. Each penny, each point, each tick is worth $10. So that's 1.1K plus the 600 we're up in the NQ puts our current P&L at 1.7K. Now, what you can do is look right here in my screen, and you can see, okay, the NQ position is up 640. The CL position is up 1,170. That's also where you can see the direction of the position, i.e., am I long or short? Did I buy or sell? So a positive green means I'm long, one. Over here in the CL, a negative or red means I'm short, right? And when this thing, if this thing were to tank and rally, it would just be a good night nurse. Here we go. Okay. I'm working in all of the common phrases that everyone makes fun of me for. And I'm well aware this mop needs to be tamed. Okay. So, any questions? Let's see. Shoot them on over. We mentioned we went long the NQ because we were in an uptrend. I wanted to get long the uptrend. This was a rebound trade in the sense that we made a double bottom down here. Okay, so that would give us a reversal entry. Okay, I didn't want to take a reversal right here. I wanted to give this a little time and space. All right. We should have taken some profit on one of these. I'll come back to that. But we saw the market rally up through the VWAP, right? Pulled back to the VWAP. So we were looking for that market to rebound off of that VWAP and run to the upside. Okay. It's moving. It's not moving super far, super fast, but it is on its way. Okay, it appears I just got a message from someone somewhere. Oh, there we go. All right. We should have brought that. We should have locked in $1,000 on that crude trade, maybe. And then just re-engage, either higher or lower for that matter. All right, let's move our stop loss up in NQ to 748. So NQ stop loss. $14,748. Someone messaging me. If I'm getting, if anyone's sending me private messages, could you hold off, please? Now's a bad time for that. Okay. Oh, Amex, I'm talking to you. Cool messages. I'm not interested. You're breaking my concentration, dude. It's always about you. You know I don't like being on camera. Freaks me out. breaking my concentration. Okay. All right. So if we get a new swing high in the NQ. So all right. So YouTubers, what I like to do here is give you our trailing stop loss levels. Ideally, I try and do it before they kind of come to fruition and explain the reason. All right. So we will move our stop loss up in the NQ to about 790 if we pop through that previous swing high at 795 and get up through that psychological level at 800. And of course, if the ES is railing as well. Okay, so that way you know you can go ahead and drag this thing and bring it on up. So let's bring it up to 785. Let's bring that stop loss in the NQ up to 785. So NQSL, bam, ba bam, ba bam, is going to be 785. Okay, now let's also add to our crude position. Let's also add to our crude position because we just locked in $600 in the NQ, and we'll assign that risk over to the CL. Also, NQ rallying. Should provide a little pressure on crude as we have that inverse correlation. All right, now our stop losses, let's bounce those back a little bit and let's go 780. And so what I'll do is I will send out an updated alert for CL, okay, with our stop losses, okay. Let's go 785 and 780. And our targets are going to be, well, we might just get knocked out, so it might not matter. And our new target's going to be 960. Did I get that out there? Oh, boy. That went to the futures room. Okay, so stop loss is going to be 110.85. Okay, and we're about to get knocked out. Oh shoot! I had mine at 80, so I got to jump back in that. Okay, my stop loss was 5 cents too tight, so I got knocked out of one at 80, so I just put it back on at a crappier price. Okay. And if I get knocked out of one, again, we've got two on, right? Because we've got one from earlier and then we added to it. All right, so we're still in one. And if we get knocked out of both, we will have gotten stopped out at 87.5 on 2. Okay, so that will be CL exit alert stopped out at no, we're still in it, but I'm just getting the thing ready. $2X. Okay, we get stopped out of NQ as well. All right, so we locked. So that was what, $600 winner. All right, so stopped out of CL at I got stopped out of 1 at 85, 1 at 90. So my average stop loss was 87.5. We just got knocked out of our NQ. My fill was 784.25. Okay, NQ exit alert stopped out at 14,784.25. All right, so the NQ is a win, the CL was a loss. So let's see, what was our average sale? We sold 65s, and then I added at 10.28. So I'm going to go ahead and add that in there. Note my CL zone market price bill was 10.28. 110.28. Okay. So what I'm doing for the YouTubers out there who are like, what's going on, is I also send out written alerts in a different service, in addition to calling them out verbally, and in addition to executing on the screen. So certainly multitasking here. And now it looks like this is going to teeter back our way. So you can re-engage in this crude trade. Let's oh boy. Let's sell 3 crude. Let's do it. Sell 3 CL market price, and let's see if this dumps. If we get stopped out, that'll be that. Okay. And we're gonna go. I'm gonna be a little conservative with these targets. I'm gonna go 10, 9. God, I don't even want to do that. Our stop is going to be 11.25. Let's do this. Let's go 960. All right. So now I'm trying to say, all right, do we push it and see if there's going to be a big fallout, or do we just look to collect some cash? I'm going to go with collect some cash. Not what I want to do, but in terms of money management, that's what we should do. Or we could just add a 4th lot. All right, hell, let's add a 4th lot. Let's add a 4th. Add a 4th market price. Add a 4th market price. T1 1010. T1 1010. T2 960. T3 20. T4 640. All right, now let me type this up. If anyone's around to help me with these, that would be great. If not, I can do it myself. All right, sell for at 110.68. That is my average. Our T1 is going to be 110.10. Our T2 is going to be 109.60. Our T3 is going to be 108.20. And our T4 is going to be 106.50. Our stop loss is going to be 11 and a quarter. And I'm going to go ahead and actually, this is going to be considered a rebound trade. Is that, if anyone, MX, please type in the regular box, please. If anyone, Robert or Joel, either of you guys around, great. All right. Okay. There's your trade. Now, what we want to watch here is the NQ. We want the NQ to rebound and bounce off of this VWAP. If the NQ breaks through it, that could be it for this crude trade, right? So we are at a point of critical mass here on the day. We could hedge this and sell some NQ. What was the swing low there in CL? 1032. Oof, 20 cents away. That sucks. All right, I'm going to buy a one lot in the NQ as a hedge. I'm going to buy a one lot. No, you know what? That's not going to work. It's not low enough to make a difference. It would have been a hedge to buy one down here. You know, so when you're hedging this stuff, there are two ways to look at it, right? If your sale position is deeply in the money, but you haven't reduced your risk yet, you would look to take a small position in the NQ in the same direction because they're inversely correlated. Or if you're doing it or in the opposite direction because they're inversely correlated, right? So you're essentially saying, all right, let's take a one lot in the NQ as an inverse correlation against a one lot we were unable to take in the CL. The other thing to do is just to simply say, oh, the inverse correlation is what it is. So if one fails, the other will also, if one teeters up, the other will teeter down. But that could also be doubling down. So it depends on where in the price action of the CL that you actually do this. Let's flatten crude market price. I don't like what I'm seeing. So flatten crude market price, flat crude market price, flat CL MP, and then my fill was 110.89. Let me double check that. Yeah, 110.89. Okay. So I looked to save $1,000 by getting out early. And the reason I did that was because the NQ dropped from 780 to 740 quite quickly. Okay. It did so in less than it did so in 1 minute. Then we 40 points in less than a minute. It was a quick snap down. So figured I'd save us $1,000. All right. All right, now is a good time. Let's take I was at 956 and change. So let's actually make it a 3.5 minute break, if that's okay with the moderators, just so I can collect my voice and finish the half hour strong. So 3.5 minutes. So we'll resume. Make it 3 minutes. We'll resume at 10. So coffee, water, etc. And we'll be right back. All right, we're back. Okay, so what do we got going on here? All right, so we did get out of crude at the right. I am happy we got out of crude. I was momentarily annoyed, right, because it did turn around, but the NQ is breaking here, so I'm okay with that decision. ES also breaking, so perhaps we could jump in that as well. Let's see. Let me just look around here on the desk, see if I can see any clues. All right, up here in the right-hand corner of the screen, taking a look at that. Just want to see what we got going on. All right, should we do an OCO order? All right, let me check out the ES over here. Okay. All right, now I'm going to look over. Okay. All right. Ooh, I see something on the screen. Ooh, I like that trade. Okay. Looks like we got a rebound set up here in the S&P. So we'll see how this goes. And kind of just keep trading here as we were. Nothing particularly crazy going on right now. Okay. All right, comments, questions, concerns. Neil's got VWAP at 24. That's the mid VWAP. All of you know Neil, so YouTubers. Neil's going to be your favorite content provider out of all of us. You had to suffer through me here today, but I'm sure you had the opportunity to listen to Neil. That's where you see the true professional come in and get it done. I'm just a warm body to give him a break now and then. But hopefully you're able to catch his sessions as well. Okay. Was there a different trader here a moment ago? Did they give you any signals? I must have missed out. There was a different trader sitting here. Oh, geez. Any signal? White hair. Okay, he was smiling. I don't know who that was. But did his voice sound similar to mine? He was watching. Oh, okay. You guys got in a physical kibble position. Chewy and Petco. All right. So the ES, or Neil had 24s. Neil had 24s. I've got 22s. Maybe we can split the difference and get 23s and buy the S&P here. Neil, do you mind if I ask, Neil, are you bullish here or are you relatively neutral? I'm kind of neutral with the weakness in the NQ, but the strength in crude right now gives, okay, so this would be this is actually, I'd say, a good little learning moment. We got CL popping, okay, as you can see on the right hand side of the screen, running towards its highs. We got NQ breaking towards its lows, right? So that was that teeter-totter we were looking for, right? So that's a clear example of the inverse correlation, i.e. NQ down, crude up, right? NQ down, crude up. So that's really what we were looking for. Now, we wanted the seesaw to teeter the other way. We wanted to see equities rally and crude break. Why were we looking in that direction a moment ago? That's not to say I can't immediately switch my position and we play a breakout trade to the downside in the NQ and a breakout trade to the upside in crude. That is on the table. Let's see. Neil's neutral. Okay. I was hoping you'd come across with like some insanely, some like real, some real conviction. And then I just would have used Neil's little nudge to say, all right, risk on, folks. All right, let's, all right, if I was by myself, this is what I would do. I'd sell crude and buy the NASDAQ. So I'll do this as just an optional trade. All right, I'm going to sell crude and no, I don't want that. I'm going to sell crude and buy the NASDAQ to see if it teeters back in line. Okay. The stop loss on the NASDAQ is going to be the low of the day. Okay. Again, that's sell crude, buy the NASDAQ. That's, whoops. Yeah. To see if it teeters back in line. If it doesn't, that's fine. It's a low probability trade, but the reward would be quite substantial if it were to hit. I just got knocked out of the NQ. Crude's not moving, so I'll take off the crude leg for a 5-cent profit. Okay. Now, one of the reasons I'm looking this way is because, okay, oh, well, here's what makes this challenging. Because the NQ is down, but the other equities are up. But they're not up much, right? So a quick dip in those spins this out of control. So let's go ahead and, come on. Let's sell the S&P market price. So let's sell 3 S&P market price. This is official. Let's sell 3 ES market price. This is going out. Okay. Stop loss on this is going to be 25. Our T1 is going to be 06. Our T2 is going to be 98. Our T3 is going to be 86. Okay, so that's sell 3 S&P market price. I got 19s. It's trading 16, so you can get in trading. So you can get in 3 points difference. But if you look at how far the targets are, you'll notice that the risk reward allows for a good deal of slippage. And let's actually bump up our T1. Responsibly, we bump it up to 09. There's also an HVA there. But this is getting crushed, so why bother, right? All right, the book says buy 9s, so I guess I'll just buy 9s. Okay, so we've sold 3 NQ. We're short NQ. We're short 3 S&P. We'll bring that stop loss down to 45.22. T1 is 09. T2 is 98, and T3 is 86. Okay. And I'm going to go ahead and just take a fill here because I got to type this out because I don't have help with the alerts at the moment. If Robert or Joel is here, that would be great to get this out. But I'm going to type this up and we'll see what happens. Hopefully nothing big while I'm typing it up. 510 and a quarter, that was filled. Our T2 is 44.98. Our T3 is 44.86. Our stop is 45.2250. And this is a risk on this is moderate, and it is a middle out into a front run breakout. And my fill price on the sale was 45.19 half. All right. So let's do the math on this trade. Okay. And I do have a trade sheet that kind of does all this for us. Oh, for Pete's sake. So let me show you this. This is actually a pretty good learning tool. All right. So the market here is the ES. The multiplier here is 50. The stop loss on this was 45.2250. Okay. We got in at 45.1950, and we did it with a 3 lot. Okay. So on this trade, we risked 3 points 3 times. So that's 3 points. Okay. Yeah, I thought that was wrong. So risk on this was 450 bucks on this trade. All right, we are looking to pay 45.10.25, 44.98, and then 44.86. We'll get the decimals up on that. Okay, so we're looking to risk 450 to make 3,213 bucks. Where are we at the moment, though? All right, so that T1 was filled. Market price is 45.08. Okay, so we've locked up about 9 points, or about 450 bucks. Okay, and we have these other 2 lots that are open. All right. So on the left-hand side in yellow, that's what our proposed is. In the center here, these 2 targets in blue, or these 2 prices in blue, those are Joseph. Market price. So right now, this trade is up 1.6 thousand. Okay. So currently, we are risking 450, and we have $1.6 thousand worth of potential profits if we were to close this down now. Now, we sold one at 45.1950, right? And then we covered one at 45.10.25. So we made 9.25 points. Times 50 bucks a point is 462 per 1 lot. Again, we did that 1 time, so we made $462. That's in the bank. What's our risk? 450 bucks. So from this point on, it's all house money, baby. So YouTubers, right? That was quick. That was quick, right? That move was quick. It's walking you through the explanation of that identification is not something I have time to do right now. But suffice it to say, I'm setting another release, crude oil, small downtick. Yeah. Let's go ahead and jump on a crude short this is not going out written alert to everybody. We have some additional strategic oil release being considered by the U.S. I don't know why I haven't had my news feed on. Well, I do. Let me get that in. Now, buy the rumor, sell the news. That's a bull loney piece of news, but neither here nor there. I am going to, so the one lot kind of optional trade, the SZM, it's about a scratch, down about $1.40 right now if you want to just get out, or you can hold it, right, up to you. Our targets are going to be, we'll just see if there's a sweep, because right now it's 10.17, okay? And so for the YouTubers who are a little bit newer to futures, the NYMEX closes at 130, right? Now, European market closes at 1030. Okay, now there is a daylight savings adjustment period, right, where the close is no longer at 1030, it's pushed. But there's also kind of in addition to that, it takes a while for the market to be fully adjusted. Okay, let's move one of our stop losses in ES down to 15.5. So let's split these stop losses and let's go 14.5 by 22.5. All right, so we're updating our stop losses. So ES stop loss is going to be 45, 14.5, 1x by 45, 22.5, 1x. Okay. And you can see those on the screen. So where I was going with the euro close as it relates to crude oil is thus, Brent oil is the global benchmark, right? Not CL. Brent is the global benchmark. Brent is what oil traders are using as hedges, right? Because there's more, then that's because of the physical market, okay? So when the euro exchange closes at 1030, there's going to be a lot of folks getting out of their positions, okay? And so many of the London traders, as of 10:30 on Fridays, and this is more so evident in the summer, it's not going to be very prevalent during wartime. But what we do is we leave early on Fridays and leave our junior traders in charge for the second half of Friday. So you're not going to see huge orders going in, moving the book after 10:30 in the crude oil market on Fridays, because it's primarily going to be junior traders who are looking to simply hedge their position, okay, or react to news, right? Generally, there aren't going to be big orders going through to initiate. It's just going to be people taking positions off and squaring up weekend, okay? All right. Junior trader, not a junior alpha. If I did misspeak, thanks for pointing out in front of everyone, Todd. You're a real gem. All right, so I'm out of that crude nonsense. Oh. Oh. I'm going to pick up some crude longs here. Optional. You know what? Crudes, I'm not comfortable dictating crude positions right now because it's moving too far too fast, and we'll be getting in and out of these trades every, we could be getting out of them as often as or as frequently in 30-second intervals. So it's not something we do here as a group. I'm wondering if we should. All right, let's move our S&P stop loss down to 1050 and 18. All right, so S&P stop loss is coming in again, and it's going to be 10 half and 18 even. Okay. If you want to buy some crude and throw it in a spec account, you're looking at 119.40 as that upside target. Of 119.40. All right, 1023. So I've got you for about 5 minutes and change here. So I hope everyone enjoyed our little session today, especially our new audience over there on YouTube. Did our best to not only give you some, to show you how we execute live and in real time, and in today's case, make some, have some very profitable alerts, especially if you took the crude alert from yesterday. And so what's nice about my schedule here is that I have the Thursday afternoon into the Friday morning. So that way I can give you my Thursday night read, and you can take that into your Friday morning position. So when I'm on the next day, we know exactly what we did at the end of the day, the overnight, and the following day. Withdrawn. Schedule is changing. So scrap all that. Let's go ahead and close out one of our S&P targets. Let's just go market price. So T2 filled at 45.04. That's going to be a money management active fill. Okay, money management active fill. All right, so yes, T1 filled, that was earlier at 45.10 and a quarter. And then right now we're going to go EST2 filled at 45.0400, and that is now. And then, okay. And our stop loss was going to be 45.08. Okay. All right. So that'll do it for me. Again, I got just about 3 more minutes, but comments, questions, concerns, like I said, please contact our superior support staff, and they can really, really help you out. They can point you in the right direction, the right room, the right content provider. I am on here in the futures room, the day trade room, and then I also have an independent service at Simpler, which is my mastery. You can ask about whatever you want, and they'll give you as much information as you want on that whole kit and caboodle. Okay, let's bring this S&P stop loss down again to 45.03 ish. All right, so let's take a look at this S&P trade as it stands. Not too shabby. We got 45.04s on that second trade. Market currently trading 44.94, so that trades up 2.5K right now. Not too shabby. And if we get that T3 at 44.86, that'll put us at $3,000. Okay, so I don't know how much the trial is off the top of my head, but I would imagine that covers it. If I were to pontificate a guess. All right, now the other thing I want to let our kind of say is that what you can do when you're new or you're testing out futures is, of course, you can paper trade too, to kind of get a hang of the frequency, the execution, following along with prices, which future we're trading, etc. Right, and you can do that. Let's actually bring this stop down again to 44.99. Yes, stop loss 44.99, and we'll re-engage if we get stopped out, perhaps. Yes, stop loss 44.99. And paper trading, of course, does not have that psychological factor to it, which is the most important factor in trading. So you cannot trade micros, right? So your risk is going to be cut by 90%, right? Because the micro is 1/10 the size of a mini. So you've got plenty of opportunity to execute live, real time, get your feet wet. Stopped out of S&P there. So that trade finished with the P&L. What am I looking at here? Oh. Oh, I got to redo that. Anyways, so that'll do it for me. I do got to get going and step aside for, I believe, Mr. Starr is next, if the schedule is staying the same. But I hope you guys enjoyed it. I hope you learned a lot. I hope you made a little, and I hope you laughed a little too. Keep in mind, trading, it should be fun. You really should enjoy yourself. And hopefully we're able to bring a little laughter to you with our guest, with our guest trader there at about 10 o'clock. So with that, I'm going to sign off. I hope everyone has a fantastic session here. I hope you enjoyed yourself. Lots of love. And from everyone at Simpler Trading and the Strike Zone, my name is Joe Rokup, and I hope you guys have a very profitable day.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Kicked off. I see that the joke got you guys on a good short. And look, I think we have at least a little bit more downside, right? As we start to dig into these markets, and particularly the S&P 500 from the perspective of the fives and the threes, right? The Elliott wave analysis that tells us to expect that moves in the direction of trend have this 1, 2, 3, 4, 5 wave appearance, right? And moves against the trend have this 3 wave appearance. Now, it was that 3 wave move down into this swing low right at the voodoo skyline earlier this week, right? That had us looking for another leg up, and we indeed got that additional leg up, right? And so now the question is, what's next? Well, look, I'm still on the fence on this one. I can see a lot of different ways this can come together, right? And let's just logic through it from that Elliott wave 5 and 3 perspective. Now, we can layer in the voodoo lines as well, right? Because that helped us identify Tuesday's high right there at the voodoo snow line. We expected to run to that level and potentially get a pullback. We expected, if it did get a pullback, that this 44.54 voodoo skyline would be support, and it was, and that sent us up. Now, the clue that that this move may have been running out of gas to the upside came from our Elliott wave perspective, but we probably got to go all the way to a 1 minute for this jobby, right? So, and look, we did have a pretty sloppy move up from Wednesday's low, but if you look at it, you know, we go up, down, up, and then, right, through most of midday yesterday, we did this little dance, right? Just wedging tight into a range. That's our Elliott wave triangle. And we know that that triangles are always the next to last in a sequence. Now, if that sequence, pardon me, is a 5 wave move, a trend move, which we expect to have been in, right? Why? Well, because we've been heading up for 2 weeks, right? Arguably since February 24th. And right, and we had this A, B, C 3 wave counter trend pullback, right? Prior to kind of 1, 2, prior to heading up. And so our expectation is that this move up is going to be a trend move, is going to have a 5 wave structure. And so within that 5 wave structure, right? Right, then if we've got a triangle, and triangles need to be next to last, then that triangle is going to be the 4th wave, right? 1, 2, 3, 4, next to last. Then the thrust out of the triangle would be the last, right? Would be the 5th wave. Now, this was a little bigger of a thrust than maybe we might have anticipated, but nevertheless, once that thrust up had the requisite 1, 2, 3, 4, 5 wave structure going as it was in the same direction as this move, well, that was enough to allow this to come back in. And so, Alan, if you could, I will try and hit your question once we get through the analysis, right? So we'll handle questions on the analysis we're in the middle of right now. If I miss it when we get later in the session, just remind me, right? But for now, we want to keep going with trying to develop this insight into where we are going, and then keep going from there, right? So so look, if this is continuing up, right, in in an even larger trend move, right, from February 24th, right, where this is a wave 1 and this pullback is a wave 2. Well, then we have enough, just using these, right, these circled Roman numerals. So circle 1, circle 2, pull back down here. We have enough structure within this rise to allow for circle 3 to be complete. Furthermore, if this is circle 3, right, circle 3, something like 161.8%, the length of circle 1 would be typical, reasonable, right? We're a little shy of that at today's high. Right, 161.8 would have gotten us all the way to 4,600. We didn't get there. We got closer to, right, 138.2. But we've got enough structure, right? We've got enough structure to, because we can see 1, 2, right, 3, 4, 5. Now it is possible that the leg up from Wednesday's low is still going, but even so, right, if we're still within this leg up from Wednesday, or alternatively, if circle 3 is over, either way, right, either way, what we would need to see in order to look to the upside again is, well, a 3-wave counter trend pullback, right? So something that looks like this: down, up, down. That's not what we have right now. So to Jake's question, am I still bearish here? Absolutely. But the question is from where and against what level? So I've seen enough to say I'm bearish against the high of the day. Why? Because in order to turn back up, right, in order to turn back up, we need to see, right, a 3-wave move. I mean, do we need to? Absolutely, positively. Is that the only way that this market could possibly go up? No, I'm not saying that, right? But we have a model here of how the market typically behaves. And look, even if it's right 80% of the time, 75%, whatever, right? That's enough to put the odds on our side for trading. Now, I would say the model is on point more often than that, but sometimes we have trouble interpreting it in short time frames, and it only comes into play, right? When we can spot things in real time. And Pete B, are you talking about the video from from Wednesday night that I put out, and that actually went out to everyone, and it was on YouTube, where I said, hey, look, right, so this is where we close the day, Wednesday, and that video went out Wednesday night and said, hey, look, guys, this is, this is doing exactly what we want, coming down from the snow line to the tree line, pattern complete. If you're going to be doing anything, try getting long the futures tonight. And we gapped up, and yeah, that worked out. And so look, we're bouncing now, and that's this move looks like a trend move, right? In theory, allowing for some of these exceptional, weird, bizarre cases which exist in Elliott wave, like the flat correction, right, which I nicknamed the fake out correction, and remember, that is in our Simpler Futures Learning Center. So all Simpler Futures members, just hop over to the Learning Center. 4 hours of pretty detailed introduction to Elliott wave, an introduction which I've been told by folks who have tried to learn Elliott wave several times and just found it frustrating, impractical, all sorts of things, right? Have gone through that introduction and said, wow, I tried this before, but I get it now. So I will relay their experience with it rather than tell you what I think about it, right? So that's in there. We talk about the flat corrections, but from a multi-week high, something that is sharp to the downside like this, unless it is part of one of those flat corrections, which I don't think this is, this should not end the move down. What we should see, right, is, right, a corrective bounce, and then at least one more leg to the downside, right? At least one more leg to the downside. Now, Tall Guy is just being friendly, saying it's the world's best intro to Elliott wave, but I will take it anyhow, and we'll make sure to grab that for our testimonials. I appreciate the very kind words. I do try and give my slant on it, which I think is a very practical take, right? And so if you go through it, you know that if we are in an uptrend, and we see, right, a move that has this structure, down, up, down, roughly similar legs, right, in length, that's going to look like we're turning back up. Now, the other thing that that you'll come to know as you practice Elliott wave, and perhaps after going through that intro, is that these patterns unfold in all time frames. So if this is a larger counter trend move down, right, a 3-wave move to the downside, right? So 3-wave moves are the counter trend moves. And so if this move down from the all-time high ends looking like down, up, down, it starts to bounce enough to convince us that it's ended. That's a good reason to look to the upside, right? But, right, what it means to be a trend move or a counter trend move comes down to this. Are you going in the direction or against the direction of the larger move? So if we zoom back out to this bullish scenario, and I'll give you a bearish scenario after, and then we'll talk about how to tell the difference, right? That's our job every day. Identify the trend and then find trades in the direction of trend. So if this is bullish, if it's 1, 2, 3, and we're pulling back in some sort of 4th wave here, well, then in that case, right, the larger pattern is something that started down here on February 24th and is ongoing to the upside. So the major elements of that, right, the major elements being the highest level subwaves, the wave 1, 2, 3, 4, and 5, right? 3 of these, those 3 being the waves 1, wave 3, and wave 5, are going in the same direction. So we would expect them to, inside of them, each have a 5-wave move, a trend move. Meanwhile, right, this pullback here in 2 and the one that we envision might be happening here in 4 would be counter trend moves. And therefore, right, therefore would have a 3-wave structure. So if you believe that we are in a larger uptrend, right, aimed up towards the all-time high, then it would also be your presumption that all of these pullbacks would in fact be those 3-wave moves, right? These down, up, down sequences here, right? And because this happens in all time frames, we can also look at that at that move down from today's high that is plausibly a 3-wave move, right? And say, if it is, and let me just get the right drawing tool, right? If it is, then inside of this thing, right? Inside of this 3-wave move, down, up, down, right? Even though this would be counter to a larger uptrend, suggesting that on longer time frames we're heading up, well, inside of the box, right, for the duration of this 3-wave pullback, we have A down, B up, C down, and because we have these 3 distinct subwaves, right, 2 of them are going to be going in the same direction as the larger move. This one and this one. Since they're going in the same direction, in this case down, right, for the duration of this move from today's high to wherever it ends, we are in fact going down. So the largest degree subwaves, this A and this C, that are going in the same direction, we expect to see 5-wave trend action within them. So we expect to see, even though it's very rapid, you know, kind of 1, 2, 3, 4, 5, right? And then we bounce, a corrective bounce, maybe done just shy of the snow line, maybe bouncing higher, I don't know, right? And then another 5-wave move down. So, you know, we can try and watch the very short-term wiggles. And I know that is a very long way of answering the question of, am I still bearish? But we want to loop this all together. I do think there is more downside, right? Whether this bounce from the low of the day is over or not, right? The structure of this move down, where we are in the larger context, suggests at least one more leg to the downside. Whether it needs a bigger bounce in between or not, right? You use your indicators, you take your spots, you take a try, but this does in fact suggest more down. Now, the bigger the bounce, to some limited degree, the better the opportunity. That doesn't mean it has to bounce more. But if we come in and say, well, gosh, where would we, for example, be if we bounced 61.8% of the decline from today's high to low, right? Up at 45.29, round numbers. Cash S&P, the spread to the futures is about 8 points, 8 point discount in the futures. So call it roughly 4520 ES, right? Doesn't mean we have to bounce there. It means it's a better short if, right? If that bounce is with, right? If it's, down, up, down, and then comes back into prior range, right? That's chop. And choppy bounces are generally corrective bounces. If it's even wigglier, right? Up, down, up, down, up, down, all sorts of re-entry into prior ranges on the way up and into the 61.8, and it starts to come back down. All the more better for feeling good about your shorts. Right? Now, could it turn down from here? Right? The 38.2 retrace, another fib proportion, which, oh, by the way, just happens to coincide with this important voodoo snowline level we've had our eyes on. Could it have bounced enough? You betcha. Right? Like I said, use your indicators to help time a short, those sorts of things. But intraday, whether from here or higher, right? The nature of this makes it look more likely, but we got to keep watching the price action on the bounce and see if it continues to suggest, right? To suggest the same thing. So we definitely want to keep monitoring that. But yes, I do like the idea of at least one more move down. Right? Now, if that additional move down is, as I said, similar in length to this initial one, if it reasonably completes a pattern, and what we mean by that, cleaning up the chart a little bit before we do. All right, so the first thing, let's come in and let's make these two legs down equal in length. Right? Doesn't mean they will be exactly, but it's a good place to start. Right? And then if that C wave down has the requisite reasonably complete 5-wave structure, 1, 2, 3, 4, 5, and starts to turn back up, that'll be a great place to get involved. That's exactly what we were looking at Wednesday, right? What we were looking at Wednesday was, right, 1, 2, 3, 4, 5 waves down here, right? A 3-wave bounce. And then we came down here, we saw 1, 2, 3, 4, 5. Not only that, but this second 5-wave move down into Wednesday's low was almost exactly equal in length to this initial leg down from Tuesday's high just after the open on Wednesday. Right? There were great proportions within that second 5-wave move down, almost exactly equal, right at our important support level of the voodoo skyline. So that's what we would like to replicate. Are they always this clean with that great proportions? No. Right? But they are, right? It makes it even easier to enter, plan, and manage the trade. So, so that's where we want to start thinking ahead. Obviously, where they would be equal depends on where this B wave bounce might end. If it's done here, then we will know once we start coming back down and we adjust this wave label here, and then we notice, oh, they'd be equal further down, at 44.72 cash SPX, closer to 44.64 in the ES for those of you who are looking at levels, right? But either way, right? A 3-wave pullback here sets up the next long, the next leg higher, right? If it ends as a 3-wave move, remember 3-wave moves are counter to the the larger degree trend. So if we do, in fact, right, whether from the current end of this bounce, right, or modestly higher, right, get that additional leg down and start to bounce, leaving this looking like a three-wave move down, that will help, right, validate a bullish view that we should look higher for at least one more leg up. So we want to watch for that, right? But coming as this does with a sharp move down, we should be conditioned to expect that this bounce, whether to here or higher, will be counter trend and at least one more leg down, right? In the bullish case, one more leg down, right? In the bearish case, of course, more than that, right? So either way, right? If you're bullish, you want to let this work itself out, right? Come down, get in. Is there an opportunity even for bulls for an intraday short? You guys got this action with Joe. I do think there is another one that you can potentially grab on your own, and maybe it's starting to develop now. We need to see, right? And if we are indeed longer term bullish, then what we would expect next would be two things. First, support at or above Wednesday's low for a few reasons. Of course, right? For those of you who want to do it the simplistic way, we got a voodoo skyline there, right? And we're looking at a voodoo roadmap. And if this really is bullish and trying to work its way eventually above 45.18, then yes, we can pause and get some pullbacks at the snow line here, pretty much directly from it on Tuesday. Today, a pop above that couldn't hold, send us back down. But ideally, finding support at the next degree level, right? Small skylines are just slightly less important than right. These fourth degree skylines are 1 degree less important than these third most important level, the snow lines. So that would be a place to revisit and ideally find support above just from the voodoo roadmap. But the other thing that we can do is we can say, well, in our bullish Elliott wave scenario, where we say, okay, up from February 24th, this is our wave 1, and this is our wave 2. And then we start wave 3, right? And the structure of wave 3 is this, right? It's got, and by wave 3, I'm talking about this larger degree, third wave up from the 24th. That would be this circle 3. And since circle 3 is going in the direction of trend, it's going to have a 1, 2, 3, 4, 5 wave move inside of it, right? And to tell the difference, we just label that smaller degree using these parentheses labels, right? To label the 5 wave move within circle 3 to the upside. And so circle 3 to the upside will have a smaller degree fourth wave. That's the pullback from Tuesday's high to Wednesday's low. And it is generally the case that once you end a third wave, like circle 3, and put in the corresponding retracement in a circle 4, that it's generally going to find support at or above, right, the low in the fourth wave within the wave 3 that's being corrected. I know that's a lot of words, right? Circle 3 has a smaller degree fourth wave in it. That's parentheses 4. we're going to find somewhere in generally, if we're still heading up, we're going to find support within that parentheses 4, right? That's the plain way of saying it. So somewhere right within here. The same way, right? We had a smaller degree fourth wave back here, and the Tuesday, Wednesday pullback found its way, right, into that range below here and above here. We'd expect the same sort of thing, just with this higher range here, right? So we're already in it, and but we don't have something that looks like a 3-wave move down. But if bullish, if this is just a circle 4, then generally it will find support somewhere, right? Somewhere above that that Wednesday low, which is also going to correspond with, right, that voodoo skyline, which from a voodoo roadmap perspective, we would expect to be maintained. Now, we can also come in here and we can say, well, okay, how about we measure this proposed circle 3 up, right, and see where circle 4 would retrace a fib proportion of it. Now, we're generally going to see a fourth wave retrace 23.6 or 38.2% of that preceding third wave. If we've labeled it right, then the 23.6 actually comes deep in this range, right? All the way down at that skyline and at that Wednesday low. The 38.2 is well below it. So if we've got this planned out right, maybe this comes deeper in the pullback range here than up here. Maybe that means that a little bounce from the low of the day might be less frisky than making it up to that 61.8 retrace we had suggested earlier. Right, but this is really early to look at these levels, and we'll refine them as we work lower, presuming we do, but we have a good reason to think that we will. All right, so that's the bull case, right? And what we would expect. Support ideally above here, but anything that ends as a 3-wave move should continue to see higher. Right? Now, the bear case, right? Let's take a look at that. Because look, until something actually turns into a 5-wave move, we don't know that it will. Let's stay on this chart for a minute, right? So we've sketched out that this could be 1, 2, 3, fourth wave in here, and then 5, right? That would be a trend move. And so but until, right, until we actually see it, we don't know. This is what some people talk about, that you can't always know what pattern you're in from an Elliott wave perspective until it's all over, right? And it's one reason that people avoid Elliott wave, right? They say, well, you only know what's going on in hindsight, and that is true, right? I'm telling you right now, this is either going to turn into a 5-wave move and continue up, or it's going to end as a 3-wave move and start coming back down. I just told you from here, we're either bullish or bearish. Well, gosh, that's not terribly useful, is it? Right? We're either in an uptrend or a downtrend. Right? I mean, okay, useless, right? But we know what to look for. We knew when to look for pullbacks and continuations up, and I've just told you that if this pullback from today's high ends as a three-wave move and starts to turn back up on short time frames, that keeps us going and increases the odds for in a five-wave move up. There's stuff to look at all along the way, right? Because there are waves inside of waves inside of waves, and that can help us figure out what to do. So, what I can tell you, right, is we know that after 1, 2, 3, if that's where we are, right, the fourth wave pullback is not allowed to enter the territory of wave 1. That is, it's not allowed to come back below this swing high. So any pullback below there, and we can shift back to the idea of perhaps printing back below the February 24th low before any turn back up. Okay, that's a good bit down if you're day trading, but it's still useful information. And we can add to that, while it's less of a hard and fast rule, if this was our wave 1 and we had one of these wacky wave 2 flat corrections, that's one of those crazy corrections where we actually allow it to go above this swing high in the corrective move down. It's not out of the question, but it is unusual to print anywhere in the range of this wave 2 correction, which travels as high as here, right? It's unusual to travel below there in a fourth wave. So while it is less deterministic, it would increase our odds that we're heading back down if we came back below this swing high, which is where, oh, by the way, right at a voodoo skyline. There's a reason we use these voodoo line levels, because if you don't want to do all this crazy, wacky Elliott wave kind of work, they tend to line up with what we want to be looking for, right? So, right, pencil it in on your charts if you don't have the voodoo lines indicator, 44.15, 32 cents, right? Or just use this swing high for those of you who prefer, back below there. And again, that would increase the odds that that this advance that we've had from February 24th wasn't continuing. So our action area, right? Our action area that we've got to pay attention to, that's gonna hold our clue, right? Our big clues as to what the next move is going to be is sitting kind of right here, right? And how we behave in here is going to give us a lot of information. If we break through that level, right, that 44.15 and 32 cent in the cash P 500, call it roughly 44.07 in in the ES, right? Just subtracting that 8-point discount that the ES futures are approximately trading at right now, and that would favor the downside. But right, our clues go beyond that, right? So we can also talk about how the short-term moves are going to appear in both situations, right? So let's say, for the sake of argument, actually what we've already said today, right, that that we come down here, finish this bounce, maybe the 61.8 level, and then another leg down, similar in size, and we start to come back up, right? Get back into the range of this initial leg down, right? Get above its low. That will keep the immediate focus on the upside. Meanwhile, right, what would it do if we were bearish from today's high? No. We come down, up, right? And then the next leg down would likely be longer and stronger than this initial leg down. And by longer, I mean ideally at least 161.8% the length of this guy, maybe even longer, right? And then we'd get a bounce that would stay clear of what is currently our low of the day and then turn back down from there. That would look like a 5-wave move, just like at smaller degree, the move from today's high to today's low looks. And that would argue, especially if it came through some of these support levels like we talked about, that not only would the subsequent bounce likely be a 3-wave move, indicating more downside, right? But that if that initial leg or next leg was even similar in length to this leg, it would get through most of those support levels we had our eyes on. And if we really were trending down, then this leg would grow longer than this one and take us well below. Right? That's what the bearish scenario would look like. So in addition to having levels to reference, we can watch the price behavior as well and use that to build some expectation for what's coming next. I am leaning towards the bullish case. Now that may be a recency bias, right? That very well may be a recency bias. I can see reasons to argue both ways, right? Some of my reasons for arguing the bullish case, right? And look, maybe you don't care about this, you know, digging in and trying to handicap it, right? Right? I mean, maybe you don't want to handicap it. You just want to sit here and wait and see what it does and actually read the messages from the market as they come to us, and that is fine, right? It's my job to come in here and go out on a limb and tell you what I'm seeing and read the tea leaves and tell you what they tell us and what they don't, right? And there are things that it doesn't tell us. We don't know for sure whether it's bullish or bearish, but I can tell you the things that I see weighing in each direction, right? And weighing bullishly, weighing, well, bullishly and bearishly, quite frankly. But if we look at this leg up and then this leg up relative to it, so that's so in some ways, being longer argues bullishly, right? But it's not so long as to strongly argue bullishly. And 138.2% still could be an A, B, C correction before another leg to the downside. Meanwhile, also, this initial start up right in here is sloppy and even harder to kind of clearly make the initial action up from this low look terribly trend like. Right, so it's really the idea that this is longer versus the idea that the move up is sloppy. And that is just serving to focus us even more intently on kind of what happens right in this area and the patterns that unfold in order to tell us which move is more likely. Now, the other thing we add into this, and we'll need to see more price action in order to fully flesh out this idea, but is coming in here and using our standard channel lines, right? So so I'll show you how we do that. Right? Let's do it to the upside first, then we'll do it to the downside. So we've got an initial leg up from the low of the day right in here like this. And then we pull back correctively like this. And now we're making another leg to the upside. Now, the smaller the time frames we do this on, the less reliable. So doing it on this bounce will be less reliable than doing it on the overall move down from the high of the day. But let's start here first, right? So all we're going to do is, well, let's first pop in some ABC corrective labels. So A, B, C to the upside, potentially, right? We don't think it's going to turn into a 5-wave move to the upside, but we want to verify it as well. So what we're going to do is going to just take the start of the bounce down here and connect the trend line through this pullback that we think might be the B wave. And then draw a parallel line through the high of the A wave. And if we get resistance near this upper channel line, it doesn't need to be at. This could poke a little above and come back in, right? But in any case, running out of gas near the upper channel line, and then if it breaks back below, it's going to look corrective. If it breaks solidly above the upper channel line, it may start turning into a more trend-like move. So we'll draw that in. We'll look at it. If this is just going to be a corrective bounce, then we very well may be running out of gas right near here, right? So we have a possible A wave up, B wave down, working our way maybe into a C wave high. And we can see that pretty much right about where we're trading now is where they would be equal in length, right? Could it go to 127.2% of wave A in a C wave? Sure can, right? But again, we can use the channel lines to help us. So, this could be a spot to look for a potential reversal. Again, we're not all the way up to that 61.8 retrace of the drop from the high of the day. But we can put this channel line in to help us and keep working from there, right? So now, once we have identified a reasonable B wave high, right, then we can use the same channeling and start to come off from it. then we can use the same technique, the same channeling technique in the opposite direction. Right? So, so we would just come in, right? Take the take the start of the move down, connect it with the B wave high, right? Parallel low line through the A wave low. And again, we can't do that until we put in a high and start turning back down, which might be here, and then we just draw the line differently, right? And if we are continuing back up, we would expect to come down. Maybe it spikes a little below the channel line, but come back up and break the upper channel line. If it breaks strongly below that lower line, then that's going to be an indication that this move down might not be behaving correctively as the bulls would want, and perhaps shift us into that bearish camp. That's where I said that we're right now in the region where price action is likely going to tell us what's going on. And I think so long as you're willing and able to manage your own risk, this is about the area where you want to start thinking about shorting. Right? If you're looking for more of a trigger, other than just coming back below this cash SPX voodoo snow line, of the day, right? From a pattern perspective, we would be looking for this move down to continue to be 1, 2, 3, 4, 5 waves down, probably roughly equal in length to this leg. And like I said, I do think this, you know, we've had a decent bounce. It is a spot where it's reasonable to start looking. And but I'm off the mic in 6 minutes, and this is a trade that, you know, it is an intraday idea. So I feel it's more important to get you all the full logic behind the trade, so that those of you who, again, are experienced enough to manage your own risk can do so on a short time frame trade, and take it from there. Now, the one thing we don't have on this chart is the ratios comparing, right, this bounce from the low with the move down from the high. You can see that the 38.2 retrace is right at that voodoo snow line level. And we never triggered below here, right? And we're coming back up. We haven't made a new bounce high yet, but it's trying. And we're still within the channel line, so I wouldn't say things cluster all that tightly. If we head directly up, if this swing low right here continues directly up towards the 61.8 retrace of this move down, well, that would be real limbo here, because it would end up taking this leg to where it was nearly 161.8, the length of this one, which isn't terribly corrective. For now, observing that that 45.18 cash SPX voodoo snow line, that's got some pressure on things. Look, we've had a lot of market stuff to talk about to fully dig into the situation going on here. So, Alan, I regret that there was just too much to catch up on the market to fully dig into your question about why I like Motive Wave. But look, I have been using this software since the year it was released. It was probably, oh gosh, nearly a decade ago now. I've worked with the guy who created it, Tony Lindsay. And it is just a fantastic platform for running Elliott wave analysis. Again, I do my own manual analysis, but it is like a word processor for Elliott wave stuff. It just it makes it so easy to manage my Elliott wave analyses and makes me far more productive in doing that. It's also just terribly convenient for just managing my charts in general. It has its own way of doing things, but if you do lots of drawings on charts and want them to appear on some time frames and not on others, and some versions of the charts and not on others, it's got a lot of other stuff like that, then it's really a great tool. It is expensive. I do believe they have their spring sale on now. Please do us a favor, if you do end up getting it, go and tell them you heard about it from Simpler Trading and from me. It will help us prioritize getting our features in there. Todd, it is funny that you mentioned before that I was graphing Elliott wave on cave walls. I wasn't. Before that, I was doing stuff on, just text labels on charts, but it's much more cumbersome. But the reason I say it's funny you mentioned that, I did post something on Twitter yesterday about the tool we did use back in the days of doing Elliott wave and fib work with graph paper and pencils and all that kind of stuff. So if you were charting in those days and you were trying to do fib analysis on your charts, well, you used a tool called a ratio compass. And I have an example. I have a picture or a link to one in my Twitter at FWTrader that I posted yesterday that I just found interesting because they are impossible to find these days. Or, well, not impossible, but they're very difficult to find these days, except for sites related to eyebrow shaping. So apparently shaping eyebrows to Fibonacci proportions is a thing, and they do sell the ratio compass tool as a tool to do that. So it's amazing the things that you can find, but again, I do have a link to, look, you could type ratio compass into Google and find the sites, but I just found it interesting. You mentioned the old school charting, and yeah, decades ago, we did fib that way. In any case, thank you all for spending a little bit of time with me here today. I will have an Elliott wave dispatch out for you Sunday night. We will catch up on everything here, see if there are any more clues through the end of the day. On bull versus bear, I do continue to think that we get at least one more leg down in this move down from the high of the day. How much more than that remains to be seen and will be a huge clue as to whether this is longer term bullish or bearish, as we talked about. And of course, I will be back here bright and early Monday morning. But right now, you have coming up the inimitable Mr. Neil Yeager. So I will leave all of you in his capable hands. Perhaps he can find a short for you, or a long. Who knows? But I'm thinking short. But Neil, it is all yours.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Hello and good morning. Thank you, David. All right. Man, I don't even know where to start. It's been an interesting week, hasn't it? It's been a good week, though. I mean, it really has been a good week. It kind of all started for us Wednesday, I guess, when David gave us the low. And we had reason to net gas pause. Let's look. Maybe a little pause, but it's, I don't know, it's yeah, we'll look at that in a minute. Maybe that's a tight range follow through for a little bit of pullback next week. Maybe that's what that is. We'll look at that in a minute on that net gas. Trying to figure out where to start. Got so much on my mind. I guess we'll start with maybe the S&Ps, I guess. So should show you one thing real quick here. The absolutely just ever more incredible power of these voodoo lines just continues to amaze me. I shouldn't be shocked anymore as much as I see them work as well as they do, but just incredible. Right at the high of the move here today, which was also, by the way, a right in the area right there. Remember, about 30 was going to be our target for this uptick because we dropped a fib from the top of the move, the all-time high, to the bottom of the break, which, by the way, was another voodoo line. And that brought us into a 618 for target this week, which came in this morning, I guess, early, maybe last night late, but early this morning, really. And so that's good. That's really good. Now the question obviously would be, okay, well then now what? Obviously, right? So if, and I'll have to find a support spot in here in a minute too. I think I know what the support is. If it's going to be, I know what it is. Then the next target up would be 45.77. So I'd go ahead and, you know, kind of consider having an alert ready there. That'd be a bullish target. If, I don't know, but I'll tell you how I think we figure that out. And given the fact that we made this 618 retrace voodoo line and healthy move off the lows all into Friday here, I've been saying for a couple of days, and it's only happened once, that I felt like this was, you know, kind of due for some type of, you know, pullback. So I think it appears to me that the evermost important support in the S&Ps on retrace is probably exactly what David just told you, I would guess. That would be Wednesday's low right here at, we called about 44.55 on retrace. That really needs to be support, because if it's not, and this is largely, I think, for next week, not today. I'll show you today. I'm not looking that far down today, but if that, let's go right here, switch this to a profile for the entire chart. You can see here that we've got an HVN lot of volume up here in this area where we're trading right now. And you can see that the ledge on that is basically, Wednesday's kind of low right in there. I mean, we 50, 55, somewhere right in there support. Maybe it's not 55, maybe it's 50 actually, 44.50. But right there, if it's not that, that's the very important, right? Because that's the ledge on this HVN at the top. If it's not that, then what it will very likely do would be a quick, swift break to the other side of this little cavity in the profile right there, which would take it down to either 4405 or 4400. That would be quick. So it would be my opinion that with the breach of about 4450, not today, this is next week, then you just need to know that level for sure about 4450, because if it gets through there, it's going to be a cascade, and that's the way I would read this. It would be a quick, swift cascade, right swiftly into about 4400. All right, so what I would be trying to look for here then would be this big move up, give it a little room for a breather back into a most important hold, 4450 support. If not, you know where it's going, but support there, and we can have in mind the 4577 bullish target idea for, that'd be the next, I'd say this way, that'd be the next bullish target that I could come up with above this 4530 that we already did and talked about, and it's already achieved, et cetera, and whatever. So that'd be the next thing up, 4577. Kind of coming in a little tighter into a more immediate time frame. It would also be my opinion that the lows, since it's broken so swiftly and we're below mid VWAP and the IB with the IB breach into the first target, it would also be my opinion that we would not be done with this move lower today. That since it's happens to have chosen this bearish path off of, really kind of essentially the 618 retrace, but absolutely spot on that voodoo line. That is absolutely remarkable. And that be it that, the news broke and we got this swift break, I'd be looking for it back into this number one area of balance from yesterday at 4490, and then also very possibly T2, yesterday's mid VWAP, which had put it back into like 4480. So I can see a little bit more down today, a little bit more. That'd be my read on this anyway. And for that intraday view analysis or whatever, where I would have to start considering shifting away from that perspective, that those targets would be this thing's being able to reclaim, retake, and beat the mid VWAP on an uptick. And so that's now, and was actually earlier. It really was earlier. The prior settlement was at 12. The IB low today is at 12. There was yesterday's high at 15, and now the mid VWAP of today is 15.16. So essentially, it started out that was our line in the sand today anyway, and now really still is, basically. That's why I chose that as the that area right there as the over under for today. It's either you could say coming into today that it's either 12 or 15. It's one of those two. It's either that settlement or yesterday's high, essentially, and that's they're that tight, it's really not that much difference, right? So, 12, 15, 15, I guess, maybe is over under now for today. It beats that. I'll shift gears and come up with a new plan, but retracement's back up into there and or beats it and kind of rolls straight back through it, then I'd try to hold for idea that we get back into yesterday's balance at 90 and maybe even the mid VWAP down at 80. Those would be my two bearish targets, but they're already planned as such anyway. In the alert section up there, that's if it happened to choose a bearish path today. And one thing I did not do in the alert section was I failed to label the 08 right there. That happened in the overnight last night. That was the beginning of a string of single prints up that was a swift move higher from about those 08s that shot immediately up to like 22. That's why I labeled the 08 as important for today. But anyway, in the alert section, the reason I'm pointing this out is because in the alert section, I failed to actually label that. I just put the number in there, and then before I labeled it, I copy pasted it, and I was like, oh, I forgot. So that's what that is anyway. All right. So let's see where to go maybe next and see what else we got to look at here. What else? Oh, hey, especially because in the room, we'll have time to talk about this next week, but there's another level up here that anybody that's just in the YouTube kind of thing today and won't find their way back. There's if you don't. Also find to be very important up here, a level at 46.33. That goes back in time. That's an old quarterly settlement print. So you'd want to kind of just have that labeled on your chart as well, in my opinion, 46.33. That's what it is. I'm not saying that this thing's headed there, but you'd want to know that that's there anyway. Let's see what else. Okay, so I would still be in favor of remaining bullish the dollar up into dollar, whatever you want to call it, index, I guess, the dollar index up to about 99.6. And then, that would be sort of next target, and be careful there, but that'd be the case. That's my thinking on that. I got nothing to say about the treasuries except they're still working their way lower right this minute. Then we give me one sec. Sorry, I had to just somebody step in my office for a second. Be careful with these treasuries on this downtick, though, and ready for some kind of little bounce, because I don't know what they're going to do any more than anybody else, but we just know that next week is the end of quarter and rebalance, and a lot of times in the past we've seen a slightly bearish equity and bullish treasury play during those last few remaining days of the quarter. And so if that's the case, that would be the retracement in the ES that we're talking about, but it would also equate to a bounce in the treasury. So I just say just be on guard and ready, kind of careful for that. Gold, same thing. I got nothing more to say about gold except that, the deal, we like it for higher. The question is from where. Target's going to be above 2100, but from where remains the question. And I don't know we'll get it, but and haven't yet, so I don't know. 1880 is the spot. We'll see. What about and Law said about nat gas. Okay, so let's see about nat gas. So up again today, but not convincingly, by comparison to some of these previous update range, this is relatively mild, and so it's bullish until it's not. That, we know. Today it's early in the day. We don't know, anything could still happen, but that's relatively mild. We could look at that as, look, I don't know, but this, okay? It's one time framing higher on a daily chart, and it's bullish as long as it's doing that. That's for sure, okay? And that requires that it continue to make higher lows, which it is doing. And so here's what I would leave you with on that gas. I view this as bullish and nothing but. I view the fact that if it does start to come back, the first thing it's going to do to tell us that is stop doing what it is doing, and what it is doing is making higher lows. It'll stop doing that by sometime next week, breaching the most recent, in this case highest, and most recent low, which would throw this daily chart into neutral. And on the heels of that, if the next day has a lower high, why then we have one time framing lower, one time framing down, which would tell us, okay, nat gas is finally ready for a retracement. Until then, it's just up. So when it's ready, it'll let us know, it'll come in. And when it does, all I want to do is buy more. So if it wants to come in, I say, come on with it, come on back if you want to. And we'd have to be ready for the first sign, the first spot that I would be really anxious and ready to see it start to find support and rotate back up, would be off of this, what was overhead, down slope, downtrend, top of this wedge formation. A breakout of that can come back down and test it for then a continuation to the upside. So that means that the first spot that I would be really anxious and looking about, okay, I must have to start putting on some of those calls. I might be early, but I'd have to start putting some on, be $5, because it would be just come back and test what was holding it prior to this, this breakout. So again, in summary, it is one time framing higher. That is bullish, and it is bullish until it's not. And when it'll let us know that it might be ready will be sometime next week. It comes in and takes out a trailing most recent, and in this case highest low. That would throw it into neutral. The next day finishes with a lower high, then it is one time framing lower, which would essentially be setting up a bull flag, right? It would start to work its way back in a little bit. You got a big uptick. It would spend a few days of kind of pullback, come in, maybe test the $5. We add to long, because I will not short it, and definitely will not short it, but I would let it come in, add to longs, starting at about $5, and then look, higher. So that's really all I know to say. I'm trying so hard to find something, anything kind of bearish about this. I can't, but I'm trying, because I would love for it to come back in and give us a reload. Yeah, but it's just, it just keeps going. So you have to keep liking it as long as it is acting like that. Crude, I'd say, I guess, kind of surprised us a little bit with the amount of the crude. So wild, that's hard to say that it really is surprising, but what I mean is, like, in a perfect world, it reaches up and it hits this 15 and it comes back in for support. In a perfect world, it would have held about $111. Well, clearly it didn't do that. It came all the way back to 109. So, but in $4+ ranges, day after day after day, I don't know you know, you just, anyway, what it did was it came back in a little bit more than I would have suspected. However, finishing like this, i.e. excess low with just a touch off of the averages right there, what you can now look for if you're not already in it would be that this is an excess low right off the average, essentially off that old quarter print for early next week, breach of today's high for continuation target 119 and whatever I told you the other day, I forget off the top of my head, I think it's 119. I have to get my sheet. I can't remember, but I don't want to guess. It's too important to guess. Hang on. Well, hold on. I think I can do it faster than that right here. It's like 119.90 something. 119.40. 119. Basically 40, 119.40. So that'd be the next thing I'd be shooting for in a bullish trigger, which would be that it did come back in and hold. That is an excess, and breach of this top would trigger, and I would be interested in trying to see. In fact, I'll go ahead and label it while we're talking about it. See, this is TradeStation charting, and I can label this on my office computer, but if I don't do the same thing at home, then it doesn't just to label it on one machine is not like in Thinkorswim where it saves the memory, you know, in the server or whatever. I have to carry this process home and recreate it on the second machine. So that's what it is, 119.40. OJ is still bullish. That's good. That's what we're looking for. Meats are still good. They're bullish. That's what we're looking for. Even hogs. Look at the hogs, man. Like that's pretty spectacular. Yeah. So anyway, the meats are still good. Rice is good. It didn't quite get to the level that I gave you for at 15 and like 0.7 or 7, like 2.70 or 72. It didn't quite get there. I think it's got an 80 low in it. It may still come in next week and show like the 70-ish price right in there, but rice is still good, and I'd be still looking for that. Higher, and this other stuff I don't even want to talk about because I'm not going to do anything with it anyway, and I'm encouraging you not to mess with it right now, and that's beans, corn, and wheat. It's just too dangerous going into Thursday of next week, so why mess with it? Except to say that my anticipation is for breaking price action that we buy for then up into July, and other than that, I just have to leave it alone. And then let's see, coffee is no friend today. It's no good thing today. But it's the same story. 220 over under, and higher is the call, and 280 is the target. And I'm still in it, and of course taking heat today. But I really honestly don't have any plans to cover it either. You know, I mean, it is underwater, but I just don't have any plans to cover it. So it's just, fact is, I just got started early. That's all. You know, I started too early. Or I'm wrong, but I'm not wrong yet. I definitely started too early. It's either that or I'm wrong, but I'm not wrong yet. So, and wrong is close below 220, and then I'll start to look at maybe I'm wrong. You wanted to do JO options today at 60. Well, I've got an order in to sell a 60 put, which is a little different than buying the 60 call. The sell the 60 put limits me to the credit in terms of profitability. The reason that I'm doing this one, though, instead of buying that 60 call, is that I had, if you recall, I had 7 of them out last week. One of them did not settle and in the money. It did not settle in the money, so it did not get assigned. So I need, well, I don't need, but I guess I wanted to add that one back in again, you know. So I'm selling it again. Since I think I did 59 last week and it settled at like 59 and some pennies or something. So it did not get assigned. I just ended up with the premium. And so I'm trying to sell it again. That's the reason I'm doing the put versus buying the call. But it's interesting, you and I are on the same strike. I'm just doing it differently, but I'm telling you my reason for doing it the way I'm doing it versus, yeah, you could, but if you're going to buy a 60 call, I don't think I would do 20 days. I just wouldn't do, I wouldn't do 20 days. I'd go out here and have time. I go out into May, have time. I wouldn't buy a 20-day, you know. Let's check the delta on that actually and see what, I mean, it's surely a 50 delta or maybe 60, 50 delta, something. Let's see. 54. That's not my style. I want more time than that. If I'm going to, I want more time than that. I'm not going to buy a 50 delta at 20 days. But I will sell that put. It's working right now. It hadn't filled yet, but it's working at $2. All right, so let me turn my attention to the chat for a minute and see, because I think maybe Lorna's probably watching the live stream questions to see if I have any questions there that I need to address. Otherwise, I can't see them. I checked in there early this morning and to see what it looked like. And it looked like folks were having fun. Which you should with Joe. Because that dude, I told you yesterday before he came on, he'll keep you busy. For sure. All right, so let's see. I think let me check volatility actually. Yeah, I think my read for like right here, right now is probably a little bit more uptick in the S&Ps that we're going to look at trying to sell for 90, 44.90 is target. And copper, I purposefully skipped that one a minute ago because I don't think I have an immediate read on it. As I was going through this and I got to gold, and then I was like sugar, but nobody actually wants to hear what I say about sugar anyway because nobody's going to trade it. And then I got to copper, and I just like glanced over it. All right. But basically, here was why. Yesterday, high for the move on selling, excess. Today, breach, triggers short. However, sitting right on the averages, so I don't have a read. I do have a preference, but I don't really know that I have a. My preference would be for it to break and continue to come in and work its way at least to 450. But honestly, I wouldn't be surprised if it gets through 450. 450, I know what my target is, 428. That's the spot down there to know at 428. But right now, just that'd be my preference. I don't really have a trade though right there for you. I mean, it's on one hand, it's you can see that it's about a half back retrace. It's an excess with the breach today that does trigger it short, but right into the averages. So, I'm thinking, I'm still kind of just now, I'm just thinking out loud. Next week is a week where we can see some bearish equity. Last couple of days of, at least the last part of next week, right into the end of quarter, right? I mean, that's certainly part of this thought process, because that would help with, this continuing to come in some. I don't know. I really just skipped it on purpose, though. I know what I would like to see. That is this move down, retrace, fail, come back in 450 or maybe below, but into here next week as equities are breaking. That's what I would like to see. I don't know. Yeah, I'm not gonna touch it, I don't think, because I can't really. Nah. Let me see. $450. Bit of tree line at 470, call it 7. Fail. I mean, I don't want to do anything with it, but if you're standing over me and gun to head and you said, what's the call? I would say short back to 450. But yeah. All right. Let me try to come up with a plan here. So today's point of control. Hey, you know what? I think I have a new trade set up that I can show you. It's not new to me. This is from our homework days years back. We call this one the VWAP to VPOC trade in the S&Ps. Let's see if I'm got this right. See if I got this figured out. Point of control. for today is 0.8, maybe half. VWAP and mids at 16. We used to do this. We used to try this trade like every time we saw it and it's set up and we had an opportunity. We got VWAP to VPOC. So in this case, this would be a 16 fade back to 0.8. It hadn't traded 16 yet, so we're not there. We can't do it yet. But VWAP's up at 16. VPOC's down at 8, so it'd be a 16 to 8. For that matter, I guess I could get cute. And let's see, what's the trade right now? What is it right this minute? 10. All right, so I could try. This is not part of the trade, but I can try this part. I'll do like 8.5 on a limit, buy limit 8.5, target 16, reverse 16 back to 0.8. How about that? If that works out, I might just take a minute to show off or something. Here's what I'm looking at. 700 check. Average is right there about 8. We know the VWAP's up at 16. So the 8 to 16 is not really part of the trade. I'm just trying to show off. But the 16 back to 8, that's our old. I mean, like YouTubers or whatever, just remember that one. Take it with you. Use it. That's your. That's something you can do whenever you see it set up. Short at 16, where would you put a stop? That's a couple points. Let's see. So I'm going to target 8, which is 8 points. So I guess I'd like 4 points maybe to start with. half the target. That's a tough call. That's a tough one, Jake, because here's why. Let me show you. I already have this on my mind, so I may as well just kind of show you what I'm thinking, why I think it's a little bit of a tough call. 16's a halfback, 21's a 618. So is it going to be a halfback drop, or is it going to be a half back to 382 up to 618 and then drop? I don't know. It's either going to be 16 or 21 on this up and then down, you know? So that's what makes the. I'll tell you what, how about we do 1875? What is that? Like 2.5 points or something, basically. So 16 would be 1875 to keep the risk like really tight.
Order fill.
There we go. Just 08 just came in. Now this is, you know, this is not really supposed to be part of it. Oh, I'm just trying to catch something on the way to be able to be short from 16, but try this 8 to 16, then reverse back down. Where's volatility? Yeah. Primarily really want to be short, but I want to be short from higher, 16. So yeah, not treating me so nice on the 8s, are you? With the 7 trade there. What are those green boxes? Oh, that's the opening 5-minute range. The opening 5-minute, opening, whatever you call it, open range, open swing, open rotation, high low of the first 5 minutes. I use that to try to determine initial direction from, on the morning. I will say, though, that it certainly was not of very much help this morning, because with the open 5 low being at 18, there was a breach with a close and a 15-minute marker lower than the opening print with breach on the short side that ended up rotating up. Interestingly, ooh, I'm getting in trouble here on these 8s. This is what I get for showing off. So what law, that wasn't very helpful this morning, honestly. So 18 by 23, that's pretty normal range. That's about 5 and 6. That's about normal range width anyway. But with breach short side and 15-minute marker short side, all that argues for lower. However, it didn't go lower, did it? It went bing up. Where'd it go? From settlement, prior settlement 12, hit the settlement and bounced big and went into David's voodoo. This wasn't easy. I'm gonna tell you something. I'm gonna tell you right now, this was not easy. I'm glad you guys did well this morning. This was not easy for me. I'm gonna tell you right. I mean, I did it to myself. I was having small, tight stops that were not kind to me. I mean, it's just it. Look, I'm glad everybody, pretty much like the room did great this morning. I'm tickled for that. I'm just telling you, my experience this morning was not easy. Like I see this breach short, and I'm like, okay, well that looks a little short, but what was it? Settlement, bounce, where'd it go? I was ready at 35. Did it do 39? I shorted 35. I'm like a 2.5 point stop at 37. It stopped and then dumps. Target was 24. At that point, that was the mids. That was a 25 to 35 to 24 planned. They got stopped before it dumped. So that wasn't, it was just, I don't know, it wasn't easy. I didn't find it easy anyway. And then I had question, of course, question mark. Okay, 24 trade, mid VWAP. What are you going to do? Could have very easily bounced. In fact, at first it did. It bounced. It went up to like 28. It bounced like 4 points quickly. And then just got slammed. Of course, that was great because y'all sold it on the way down. That was awesome. But I don't know. It wasn't easy. I didn't think it was easy. And so now I'm not happy sitting with these 8s, to be honest with you. And I'm about to get caught in another loss trying to show off. What did I do? I got 3. Giving me series count. I don't know. It shouldn't do that. That's baloney. I'm taking 1 off for 2 points here at 10 because I was getting pressed on the bottom down there. Man, I'm not getting the bounce I wanted from 8. It's just not really giving me a bounce, is it? I'll tell you what. I'll take 1 more off here at 9 for 1 point, and
order filled.
And that way I can use a 3-point stop now that I've just banked 3. 2 plus 1 is 3, and I'll run an 06 stop on the 8 long I can afford 3, but I'm going to put a stop at 06 on this 8 loan. Target 16, reverse at 16. Basically, I just used a little bit to pay for this risk that I'm going to give it still from 08 down to 06, where I can still stand to lose 2, but financed 3. Target 16, plans to reverse at 16 for short target 8. I know I'm lost without series count. Okay, we got to figure that out because that's baloney. They shouldn't do that to you. Let's check mine. Mine are still working, so yours should. So let's see. Why aren't yours working? What can we do about that? Sequence counter, array period 13 and 9. In my case, continuous ticker. I don't know that matters. Continuous ticker, or let me designate it to M22. No, it still works at M22. Have you tried? I bet you probably have, obviously. Have you tried taking the indicator off of the chart completely and then reloading the indicator back on the chart as though it were loaded like for the first time, i.e. removing it and replacing it or something? Okay, you got it. Cool. All right. Well, it's good to have a problem solved, man. It's a Friday and we're solving problems. I mean, I don't know what more we can do on a Friday but solve problems and like have a good Friday. Joe started us off. Listen, I'm going to say something out loud because I said it the other day and you may as well know this. I'm speaking to the folks in the YouTube thing, or wherever we're doing this. David Starr. Well, man, we've got a fantastic group. Period. Absolute end story. We've really got a good group. Of course, I'm bragging, but I really mean it. David, I'll remind you, gave us the low the other day. The low, the dead low on Wednesday for a 100-point target. Darn near 100 points of 90. May as well call that 100. 100-point target for the 45-30s. They end up going 100. Ended up going. The target. Oh, I got a target here. Hang on. Speaking of target, there's 16.
Order filled.
Okay.
Order filled.
Now I'm reversing. I'll tell you what, if this works, I really am going to show off. On this one, I'll use 1875 stop. Split the stops, 1875 and I guess 19 even or something. What was I saying? Oh, so David gives us the low, and it turns out that the high of the move is one of his indicators, the voodoo lines, which everybody needs to know about. If you don't know, you have basically just come join us in the futures room and find out. I'm telling you, it's an amazing indicator. And in the middle of all that, Joe comes in and he's making, what did he do the other day? Pulled like $4,000 out of crude in a half an hour or something crazy. I mean, it's a powerful group. We got a good group. Will you reload the 1230? Oh yeah, reload. Oh boy, yeah. Wow, that's a reminder, isn't it? Okay, Cal. Okay, Cal is saying something in the futures room. I don't know if YouTube can see the questions or not. So here's the deal. Cal's asking a question. This is an interesting one too. Would you reload for the 1230 trade? Oh boy. Oh boy. That's an interesting one. We got to talk through this. We have to talk through this. Because here, first of all, let me do one thing. let me do something. I'm going to take a little bit off of this short because remember my stop was only 3 points. So what's 16 by 12? See if I can get 11. I'm going to be a greedy little rascal here. See if I can get 11. Ooh, you can give me 11 right there. Oh, ooh, you got 11 quarter. 11. All right. So anyway, so scale one of those 16s at 11 for +5. Bring the stop down to 1675, something like that. Man, I'm showing off. So Cal, this is really interesting. Will you reload for the 1230 trade? Okay, because we know that our 1230 trade is a long. It's a long trade, right? It's a long setup. But here's what we also know. We know that, well, right now we know we're below mid VWAP, right? We know right now we're below all the mid VWAP overhead and all that kind of stuff, right? And we know that as long as it stays bearish, we've got targets lower, like yesterday's balance at 90 and maybe even mid VWAP at 80. We know that when the 1230 trade fails to work, then what it is doing is setting up a bearish setup that calls for target new session low. That's the setup. When 1230 fails to work, settles lower, it is a distinctively, I get some funny pokes on that sometimes. It's distinctively bearish. And people enjoy poking at me on that, but that's cool. I'm a good sport. But that's a short only setup when it does that. Oh man, I am going to show off now. It's an 08 trade. I'm going to book this 08 trade.
Order filled.
Man, come on. You got to give me a little love there on that. It just traded 08 to 16 back to 08. Caught the tip tail of both moves. 08 to 16, 16 back to 08. So effectively, the S&Ps just went nowhere, but yet we just made 16 points while they went nowhere. That's pretty great. That's fun. That's what you call fun. But anyway, what am I trying to say? So 1230 is supposed to be a long. We can try it. All right. It's going to be in 6 minutes. You know, we can try it. If we're so fortunate that it works, then that's great. It'd be great. You know, it'd be cool. If it does not work, Cal and everybody, here's what you got to know about one of those little nuanced intricacies, whatever have you, about the 1230 trade being a failure for the intended long. And that is when it settles lower at 1 o'clock, the setup is new low for the day is target. In this case, we target 90, 44.90, and 44.80. That'd be our targets. So now I got to think for a minute about what do I. Yeah, I guess we're here. We do it. We're here. We'll try and figure it out. So in a couple minutes, it's going to be 12:30. I don't think I like it, but the risk is going to be so contained that we may as well just give it a shot. The risk is going to be really tiny, so we'll try it and just see if it works. What I would, in this case, you know, I hate to see it fail because I love the trade setup, but I would actually kind of not mind seeing it fail today because it gives us the 100% focus on the short setup, and the target would be, oh, it'd be a sweetheart. I mean, you know, we're talking 30 points. Maybe 40 if it goes all the way to, you know, 44.80 or something. But anyway, it'd be a nice trade, right? It'd be 30 points. I don't know. Something like that. So I wasn't thinking about it like in full like that. So thank you for the mention, right, Cal? I mean, I appreciate it. That's really thought-provoking. And honestly have to thank you for like making me like think through that. Let's go look around and see what else we got. Oh, daily pivots at 92. Maybe that's why it bounced earlier, I guess, right? Daily pivot. Boy, I let you down this morning. I should have had that in the notes. That's my bad on that. I really should have had that in the notes. I was so focused on yesterday's balance right there as being the target. That I overlooked the pivot being right there. It's getting awfully close to 12:30. I think I'm supposed to go until 1 o'clock though. I think I'm here until 1 today. Law, whatever happened to matching this, buddy? Okay. All right. So I think I know who you're talking about. The NASA. I mean, honestly, literally, he was a rocket engineer. No kidding. He was a space engineer. Worked for NASA. Had like, I don't know, 100-something people under him. You know what I mean? But he passed away. It was a shame that he did. And how long was that? Man. When they, you know, when they kind of wound down the space program, you know, it laid him off. And from that point, he just sort of, I don't know, he wasn't happy anymore, you know. He was happy launching space missions and managing them, you know. It was cool. But yeah, man, dude was crazy, wicked, crazy smart, math. And but now I had to think for a minute because I wasn't sure if maybe we were talking back to homework days, right? That was Doug McKay and Doug Beal and Howard Akrish. And Howard was our data kind of cruncher guy, right? Doug McKay was the leader of our little group. He's the one that headed up after post session meetings, and Canadian fella. Doug Beal, also same thing. Doug Beal was the guy that told us a lot that we use still today for gold. He was we called him Ducky and his golden eggs. He was the guy that told us to look for the 2000 hours or 8 o'clock at night pivot in gold, and then again at 2 a.m. the 2 a.m. pivot in gold. $13 at the time. It was like $13 average moves in gold. 8 o'clock and 2 a.m. Central Time, Chicago time. For anybody listening doesn't know that I always talk in Central Time, Chicago. My excuse is that, you know, the futures are in Chicago. But here's a 12:30 setup. But anyway, I don't know, man. A lot of those guys have just kind of moved on, and I don't know, just kind of moved on. All right, what's the deal here? I'll try it, you know, because the risk is going to be super tiny. And I'm going to give it, like yesterday, I'm going to give it a greedy target like yesterday, because I want something that's going to significantly offset the risk that I'm going to be willing to take on this, right? I mean, crazy significantly offset the risk on this. So my target for this is going to be that 618 level up here at 21. I don't think it's reasonable. I will tell you, I don't think that it's reasonable, because But it could, right? It is a 618 of the break from the top of this morning to the bottom. That's the 618. So that's our target. 21's our target. So let me see if I can start getting in here at about 06 half. I'll pay 675. Probably I'll pay 7 and 675 or something like that. I don't know. Yeah, basically it's base. I'll probably pay 675, but the trade would probably be, you could think of it in terms of 07 to 21 target, and from 7 we need, we'll call it 4 points of risk to 03. So 7 long to 21, 7 stop, 3 for -4, 7 to 3 -4, 7 to 21 target plus 14, risking 3 to make 14 for the 1230. And as we would like to do to try to help is to also see if we can use the trend spark here to try to help us navigate this a little bit. This also agrees that, well, this says 7 might be a little too cheap, but we'll try it. 7. This actually argues you're going to have to pay up in front of 7. You're going to have to pay 08 is what this argues. This says that I'm not, this ATR on that 700 tick argues that I may not quite be able to get 7s, but at either rate, it argues that the stop is at 3. So, and the target is 21. 4's on oil. Fours on oil. What's going on oil? I don't have that up right now in front of me. Let's see. I'm on oil. Oh, I think I know what you mean. The 0.40s? The 0.40s. I bet that's what you're talking about. Law. And in crude, like when it hits a 0.4 and does a major pivot off of 4, that's historically a good pivot in CL. 0.2s and 0.8s in the euro, 0.4 in crude. Those are really good pivotal levels. But now don't think too harshly of me when I say this next thing, especially if you've been trying and it's been kind of difficult. You might not find this as funny as what I'm intending it to be. But with $4 and $5 ranges and crude, you get like 4 or 5 chances for the 0.4s to work. Like I said, you might not think that's as funny as I'm trying to make it sound. Oh, what is this? Okay, look, for anybody that's interested. Here's the little intricacy, the nuance of our 1238 is this. I don't ever care how high it goes. If it goes wherever it goes, and it also rolls back over and it settles down here below that white line at 1 o'clock, it's still a short. This thing could go all the way to 21, hit the 618, reverse, and come back down and be at 7 or something like that at 1 o'clock, which is still 24 minutes away, it's darn sure got time to do that, right? Even if it went crazy all the way up, 14 points to 21, rolls and comes back and settles 1 o'clock at 7, it's still short. Still short. And it's the same every single day. As long as that day, ends with a Y. That's about all. Oh, so what's the thing? Who wants to do what? Lorna, have I got any questions I can't say or anything? Or is everybody good? Very happy? We're just moseying along doing our thing. And I think the OH are still coming in. I don't know. It's growing harder and harder to imagine now, isn't it? I don't know, Todd. It's harder. It's harder to imagine with every little bit, but Todd. I mean, if we got this figured out, they're going to trade again. The question is, do we still want them when they trade again, or is it swiftly on its way down at that time? That's the question. Let me see if I can find a way in here, another way in. It's going to cost more, but see if we can find a way in. This is not normal average price behavior anyway on 1230. Normal average is print dip up. This print straight up is not really such the normal behavior, I guess, or average. Let's see. What can I try to figure out that we could still do here? Man, I hate to Todd, you know me, I hate to chase. As soon as I chase, I end up underwater and have to start to work and wiggle. What can I do to try to short from higher. That's the thing, right? So, but that's the question. Where is it going to go next? It already went to mid VWAP. Is it going to go now further to the the 618, which would put it to about 21. I'll go recheck that real quick. I think that's the spot. Let's go see if that's the 618. I believe it is. Yeah, 21 and 2 ticks is the 618. See, it just touched off on the 50. Just tagged it. Just touched it. Went back to 8. It's working its way back towards the half. If it makes it back to the half again, I'd have to go ahead and imagine that what this was is a 50 back to 382 up to 618. Crash. What time is it now? 12:41. Still got 20 minutes. Man, I don't want to do this, but I'm about to chase this thing a little bit. I don't like chasing, man, but I'm about to chase this thing. I'm trying to find a spot to chase it. How about 09.5? I don't know. I'm just gonna just do it something small enough that we're not gonna get our feelings hurt if we're wrong. But 9.5, paying up to 9.5 and get it here in just a minute. This usually does not end well for me when I chase, but here we go. What about the Dow? Where are you? What about the Dow? The Dow's the one we can always find something to do in. The Dow just came in and bounced the even hundreds at 34.6. Okay, so I don't want to do both of these now. So if somebody prefers the Dow over the S&Ps, I wouldn't do both. Don't do both because they're both going to be long, and you don't want to be wrong on both of them. So don't do both. But if you like the Dow and want to do that instead of the S&Ps, not doing both because they're both going to be long. 34,581 buy limit long with a 64 stop. On the Dow, if you want to do that one instead of the S&Ps. $34,581 with a 34,564 stop. And it would be a long until the S&Ps trade 21. And whenever the S&Ps are at 21, then the Dow is at target. What about the NASDAQ? We don't leave the NASDAQ out. Heaven forbid. What about the NASDAQ? I don't really see a level for the NASDAQ. I see a level, but I don't know if I'll still like it when it gets there. It is 14,647 support for the NASDAQ. Or it's not. It takes 20 points of risk to figure that out. That's about $400. 14,647 in the NASDAQ. Long target whenever the S&Ps are at 21. Risk 20 points at 27. Again, I would not do all three, but that's a way to say, here's a level for the S&P, here's one for the NASDAQ, and here's one for the Dow. Because I like the Dow. I really do. I really don't like the NASDAQ. But I know some people do. Even though I don't. What do you think of crude? I have to look. Give me an idea of your time frame. I mean, because I already discussed it on a daily chart. Yeah. On a daily chart, it's set up. Well, let's check and make sure it still is. I mean, still looks the same, I guess. Yeah. Yeah, on a daily chart. Hang on. Format window or symbol? Symbol. Okay, here we go. Yeah, on a daily chart, I mean, I don't know what periodicity you want to talk about, but on a daily chart, that is a pullback to basically that old quarter print at 8 for excess. Firm finish tells me that first thing Monday, or yeah, Monday, I guess. Breach today's high, triggers long, target 119.4. I don't know what it's going to do, but that's the setup. That's what it looks like. And then you're using intraday 2 minute. Okay, all the way down to intraday. Okay, intraday. See if I may. If I don't, I'm just going to say I'm sorry. But let's look. See if I can see anything on the intraday. What's that? 10 minute over here. At. All right. Man, I'm going to tell you right now, you need to be careful. That thing is right now on a 700 tick chart. It's short. On a 5 minute chart, it's short. And on a 10-minute chart, it's very much in balance right there. It could do, I mean, it could explode to the upside or dump, and I don't know. On the down, it's got some, well, maybe, but target and, well, maybe support at 111.60, what do you want to call that? 67.8, 68, 67, 68, something like that, whatever. 111 point, like 60 something. And at that very point, you would want to be ready to let it bounce. And you know, but look at this, man. Do you see how much room there is on this chart as wide as these ranges are on a 5 minute chart? The range that this is crazy range. This is a 5 minute chart, man. and it takes all the way to 113 and like 30 cents or something to reverse that 5-minute chart to long. So you got almost a $1 stop for a $1 target, and that math doesn't work. I mean, that math doesn't work. That's a 5-minute chart. Let's see if I can do any better for you on your 2. You're looking at a 2. It's got overhead to 113, which is basically the same as the 5-minute. It's all the way up to 113. It's still short. For ATR on a 2-minute chart. Okay, well, we know that. Let's go see what else we can figure out about it and see if there's anything that mid VWAPs down here at the price I just gave you for like target 111.60 something. Overhead happens to be daily pivot at 113. 5-minute short. I guess it's a short right now, Jake. What are you looking for? Are you looking for a long or a short? I read it as a short. Target 111.6. That starts to look bad at 113. And I don't know what else to say about it. I don't know. It's a dangerous spot. You basically got a $1 risk for a $1 target. I don't know why you want to mess with that. I really don't. I wouldn't advise messing with that. On the risk reward, you know. So now a couple of things here. The time's 12:54. That means that in about 5 minutes, I have to mute the mic, and and boy, Jack will be the one that will be coming in, I think, to pick up where I left off. Jack's very good. Doesn't need my help. So I would only, I think, be able to leave you with the advice of remembering that 618 retrace on the break from this morning's high to low is at 21 and some pennies, 21 and 2 ticks, actually 21.5. So that's all I'm gonna say. If you're long 1230, that's your target. The simple regards CL and ES as an inverse. Right now it is. It's every correlation, in my opinion. I like that handle too, by the way, because I definitely like 38 special. And Leonard Skinner. The Van Zandt boys.
Order filled.
What the hell was that? I gotta figure out what just happened. Holy cow. I forgot. I left some orders out and forgot them. Is what that was. Man, Let me see. Let me get out of this. A click error is never a good thing.
Order filled. Order filled.
Doesn't usually end well. What was I answering? The crude. Okay, the correlation. Okay, here's my feeling about correlations. They're always something that we are trying to keep up with and continue to manage and study. What is the correlation and how good is it? Is it inverse, etc.? There is a way, if I can find it for you real quick. There is a way. I've got a style set up for it. Maybe this one. Yeah. So here, let me check and see what I've got on here. I've got ES versus 10 years. So you can monitor the correlation and how good is the correlation between one product versus the other. Okay, so with that, let me share this for you. And I think I'm going to have to share this one because I can't imagine that Lorna has this one. So would this possibly help? This would be a correlation comparison chart. It's my opinion that we are constantly in search of the answer to the question, what is the current correlation? How good is it? What is it? Is it on again, or is it on, or is it off? And there are certainly, as you can absolutely, I know, just know for fact that when energy is uptick, it is very supportive of the S&Ps. There is a large amount of energy equity in the S&P, so there is certainly a positive correlation at times. There is right now, and right now is when you're asking, there is, in our opinion, right now, as you just heard Joe trading crude against NASDAQ this morning, it is currently, yes, our opinion that there is an existing, at this time, right now, inverse correlation between crude oil and equity, i.e., S&Ps. So that's a long way to get to your answer of do we currently view crude and say SPX or whatever as positive or negatively correlated? We currently view it as being negatively correlated. But there was a time pre-QE when, of course, there was an inverse correlation between and it was pretty reliable at the time, between the equity and the treasuries. But all that went out the window when it was, Fed buy bonds, buy, MBS, buy everything, just buy, inserting, liquidity into the market. And then not necessarily did that correlation exist any longer. It was on again, off again, love-hate relationship. Anyway, that's my answer to the question. Okay, good point. Todd says, what about and where from here? Todd, answer to your question is, it is 1 o'clock and I am off the hook. But I won't do that to you. I think that you want to watch right here for the very indeed possibility that this thing could very, very, very easily roll off of this 21.5 price right here. And here's a spot for you to watch. And it's a spot for me to tell you that that was supposed to be your target on your long 1230 trade. And the final word on this is, it is now Jack's ball of wax to take from here. And I will gladly exit rather than try to make another decision for us all when it's no longer my place to do that. So thank you, Forrest, very much. Good seeing you today. Law, Todd, everybody, appreciate the interaction and the questions and everything. That helps to make our time both useful, valuable, learning, and interactive and interesting and everything. So good weekend. Charts will be back up Sunday night for the Globex Open with levels, pivot, overhead, support, everything. And there'll be these charts. In fact, they'll look just like this. Red's pivot, blue is the overhead and the support. You know, if it's over the pivot, then it's overhead. If it's below the pivot, then it's support. All that'll be back up Sunday night for anybody that wants to come in and have your way about it. And peace out. I'm done. See you. Enjoyed it. Thank you. Bye.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot. All right. Hey, good afternoon. Happy Friday, traders. Hope everyone's doing well. Just let's get it out of the way. You know, I think we're on the right track. Bullish continuation for the rest of the day. Something a little bit more high. Well, I'm going to go ahead and say we could close about 45.40, 45.50. I'm going to go ahead and say that that is a possibility. And as Neil was kind of guiding you through what has been happening for the day, what I'm looking for is a continuation and a potential gap up for Monday and Tuesday. So a continuation into what I was talking about last week whenever you were in either the future session with me or maybe the day trading room Monday and Wednesday mornings. Looking for a 4,600, at least testing 4,600, not exactly, you know, going to the heavens above 4,600, but at least coming in to Wednesday where we could be trading around that area. That makes sense. So right now, what I have in one of my small accounts is a put credit spread that I'm selling on SPX, the cash settled index, for Wednesday expiration. That's going to be March 30th expiration. So I wanted to show you this real quick, and feel free, like, you know, feel free to join me on this journey on SPX. The put credit spread that I sold, and I'm just going to make this window very narrow so you can just see both of my positions that I put on this morning. And I think you could do just as good as I did. This first one here is a butterfly at the top, and so that's that Wednesday expiration. It's right at the top of your window. Wanted to make that small because everything else can kind of make it, it can get a little contorted and hard to read. So it's just kind of up there at the top. We have a butterfly for Wednesday pinning at 4,600. That's a lotto style butterfly. It's only $15 wide. And then we have a put credit spread that we sold this morning, taking in a $3 credit. I think some people got filled at 320. This was in our live 10x bar live trading, kind of a awkward morning where you didn't have a whole lot of volatility, and then you had that weird 1015 1030 flush, and it was like, okay, you just brought the SPX or the S&Ps down to almost 4,500. Now what do we do? Well, what we did was we were kind of patient with it. We kind of put this position on, both of these positions on, right at 1025 and 1019 whenever that was happening. So we were able to get filled at the mid instead of having to walk it up like crazy and, you know, risk a little bit more money. So I'm okay with this. So butterfly for Wednesday at 4,600, and then for Wednesday expiration as well, trading above 4,560, and obviously inherently we would be benefiting if SPX went to 4,600 anyway with that position. All right. So that's what I put out there. And that's, you know, more of like a long-term, anyone that's just trying to be like, okay, what do we do for next week? I'm warming up the stove with that one, with those two. Warming up the stove. All right. I'm trying to make my favorite Alfredo noodles, and I'm just heating up the oven. Wait, it should be the stove. It's not the oven. Hey, my wife's the gourmet chef. It's not me. All right. So what are we doing here and now? Well, this morning, what I was looking at with the 10X bar people, one of my favorite indicators, y'all know I use 3 different time frames to trade with. And right now, what I'm seeing on this workspace, on the NASDAQ, we're looking at kind of a reversal, which could take us back into 14,800. I know, I said it. You may not believe it. It may not happen at the same time. We're still looking for a continuation with the 10X bars that are just flooding the environment with green across the board. And by the way, if you're not long right now, you can be on the NASDAQ. It's, you know, if you're trading micro futures /MNQ or anything like that, you have a 5-minute squeeze right now that's trying to fire. Technically, you're 15 minutes late. But you know, Neil's one of my favorite peeps planet, and you know, I was able to catch a little bit of his session today, and you know, I think if you're not long right here, maybe you're waiting for a little bit more of a pullback. Maybe it's the NASDAQ, get a pullback down to about 14,700. That'd be kind of best case scenario if you're trying to be long into the afternoon, which I completely support. I think we're going to trade higher in the ES, at least back into where we were this morning. The Friday morning high is 45.39. I don't see why we wouldn't be able to trade above that. This is a nightmare for anyone that's been short, by the way. And this is the second week in a row where we've seen kind of a weird situation Friday that really is the catalyst of all this is Wednesday. You know, around Tuesdays, Wednesdays have been really key. And so if we could project into the future, let's just do this for a second, little thought experiment. Monday, okay, Monday, let's just say at best it's trivial and it's no conviction. All right, so no gap up and no gap down, the world's not falling apart. Tuesday, if there is a continuation of the buying and we continue to see that, that puts 4,600 in the ES at play. That puts the other spread in play above 45.65. But what does that mean going into next Friday? And that's where it gets good, because what we have, and this is what we talked about this morning, is a potential, and I have a fancy name for it, but it's not that fancy. It's just, you know, you could say you could say I'm just trying to be creative and fill the void. I don't know. But what I'm looking at here is the S&P on a daily time frame, full on completing the process of the good old triple bottom in a bear market. And yes, you can just, I mean, it's not like a long-term statement. I'm not trying to be declarative and say we're in automatic bear market forever for 2022. I don't think that's the case. But what I do think is the more tangible case is that we have had 1, 2, 3, lower high, lower low, continuation of a squeeze going higher. And what I like to do, this is one of my favorite things on the entire planet outside of my wife's cooking and my beautiful bobtail cat, is a triple bottom. And typically triple bottoms not only cancel out the first low high, second low high, third low high, and even better that the third one down here, okay, now it's too much magenta drawing, but the third leg, third bottom, especially lining up with this beautiful red voodoo line, is typically the lowest on a triple bottom. Check it out. The whole time you were doing that, you were squeezing. So what I'm doing is saying, okay, well, I don't think we're going to 4,800 that fast, but I do think 4,600 is well within reach. Okay. And typically, Jake, yeah. So the question is, isn't a triple bottom where you get 3 lows that are about the same levels? Yes, they in this market, or really in general, you can bet a little bit if you're on a daily time frame, and you can give it a little bit more time. I was about to zoom in because you kind of anticipated my next move, because you're so smart. What I was going to do was show you the other type of technical triple bottom, which is just these right here. It's not so much going back out further in the past, you know, not going back to the end of January, but just considering these 3. Okay, so you know, I love the upside. I think targeting that 4,800 level completes on the other side of the coin here. Stick with me, folks. What that completes is another prophecy, and what that is the good old head and shoulders. And if the market is that nice, which, you know, if you follow Sam, I like his take on this, where it's like the market's not this nice. It's not going to give you a perfect head and shoulders, you know, signal. But look where we are now. And I think Sam has a great point. But at the same time, now we continue to push higher. Let's say next week by Wednesday, we're at 4,600. What are we going to do here? Well, this is where I'm taking off my bullish positions, and I will cautiously be bearish because it's the head and shoulders. And we've been waiting patiently for this. And by that time, again, looking at the squeeze histogram here, you will have been fired. You know, you well, keep your job, okay? The squeeze will have been fired. We'll have fired. Okay. All right. So forward progress higher into the afternoon. It seems like the ticks are trending a little bit better. The advanced decline does not worry me at all, being at a neutral to negative position. There's nothing really out here is specifically super bearish at all. Again, just tracking this 5-minute chart that had that ES squeeze, pretty cool. Let's just go to that real quick. So the level, if you're looking for a target, my first target is going to have to be 45.40. A few reasons for that. I know that's kind of way out there considering how we've been trading today, and it's been kind of an awkward day. Well, here's the consideration. We have, let's see, it's 1:15 Central. We have an hour and 45 minutes into Friday close. That is a lot of time, especially if we do not make a 3 or a 5-minute reversion to the mean. Now, why do I say that? Reversion to the mean is just a way of saying, you know, it's a way of recognizing that all things revert to their mean. And so if that's the case, I typically on a day like this, I'll keep it at the 5 and say, all right, well, what does it make sense to buy? So don't freak out if the S&P goes back down to about 45.16. All it's doing is reverting to its mean on the 5-minute chart. On the 3-minute chart, it would be somewhere around 45.16, but it'd be a little bit higher, like 45.18. But it's the S&P 5-minute chart, you're solid. So the question is from there, do you want to get long? And I'm saying, I think so, based on the 10x bars, based on the Keltner channels and the squeeze right now. And then we can expand from the 5 and go into the 15 on the right-hand side. And this kind of drives home the point. New, fresh 10x bars. Okay, if you don't know anything about our 10x bars, go to our store and check it out. And good to see everybody here on YouTube. And the reason why I say that is because it's not so much like I'm not your salesman. What I am is your experienced trader. And I used to trade with the ADX and the DMIs. That's like 6 different lines with no color. And it's really hard. And I'm trying to make things efficient and try to help other people learn how to trade and ease the suffering. And so with that, there's the 10x bars, and you get directional conviction on all your smaller and larger time frames. You don't have to do diddly squat to do any type of setting changing or anything like that. The only setting that you might want to change is you can right click on Thinkorswim. You can go edit study, okay, 10x bars. If they'll populate, there we go. Well, there we go. Do. So check this out. So you can see way down here, you know, obviously I've got a bunch of multi-histogram, all that kind of good stuff. Multi-thermometer, you know, a lot of stuff packed into this thing. But whenever I look at my 10x bars, in fact, we could do it on, let's do it on this workspace because you'll see it a little bit more clear. Let's go here. Here we go. This will work perfect. So here's 10x. You right click your any indicator on Thinkorswim, you right click it, it gives you the settings options, right? Your main line that you want to focus on is, this is the only thing I change whenever I'm talking about 10x bars. It's the only thing I also say that you don't have to change if it defaults to 50 volume percent threshold. That's 50 right there. So what that means is whenever you make this setting 50, it is basically begging the indicator to track whenever there is 50% more volume equally on whatever time frame you're using. Doesn't matter if it's the 5, 15 hour daily. Okay. And what that means is it's either, and you go within the color of the 10x bar. If it's green and it has a dot on it, that's a strong 10x bar. Okay. And I'm typically trading micro futures on the 1, 5, and 15. So whenever we see in the room, you know, 10x bars on the 5-minute chart that are starting to be green and printing volume dots, look what happens there, right? Same thing for the opposite. Look what happened here on the NASDAQ this morning. You can't see them here too well. Let me change this change this setting to where you can actually see the volume dots. And so I can go here, edit. Okay, this color pink, just change that to just nice gold. All right. And so now you can see those gold dots. So it's not about the color of the dot. The dot can be any color you'd like, but you just need to be able to visually see it. And I'm not able on this workspace over here on the right-hand side, able to see pink, but you can see them on the green and you can see the gold on the red. So if it's a red 10x bar and it has a dot, that is selling. If it's green, it's positive. It's a good thing. There, all right. Looks like I missed it. I always like to just go on my little diatribes, kind of unpack the afternoon with you, and then kind of dive into some messages here. So I'll start with numbers here just for a second here in the futures room. Looks like I missed a little bit. Well, actually not too much. I'm making good progress here. Okay, yeah, Gino for sure. And YouTube. Yeah, hey Keith, thanks for joining us today. Nice, Wilkin. Okay, so you're seeing maybe the 45.40 and the 45.45 in the S&P for the close today. I think it's possible. I think it's entirely possible. And so as we watch this, early part of the afternoon start to unfold, but at least the ES is holding 45.20 with flying colors. And by the way, that 5-minute squeeze did fire. And I wonder if we're even going to retest the kind of 12:45 to 12:55. Whenever Neil was talking before me, that was whenever you had that nice little bump there. Okay. So I was monitoring the squeeze. I did have my audio off just for a minute, but so I wasn't able to hear, but just kind of watching the situation unfold and looking at the NASDAQ. Whenever the NASDAQ goes heavy, then you got to give the S&P a little bit of room to make a little bit of a plunge as well. But look what it's done. I mean, the NASDAQ is looking solid. It's right back above 4,700. It was a little dangerous at first. I mean, everybody was kind of freaking out this morning. I say freaking out, but 10 o'clock is whenever we were talking about putting on bullish spreads, and then you had basically a 200-point down move this morning between 9:45 and 10:15, and I basically put up a red flag or a white flag, really, of like, hey, retreat, hold on a second. We have some red 10x bars. We have to take a breather, let this market do what it wants to do. All these random flushes, which is even more, especially because it's recovered, even more evidence that we should be trading higher. Maybe not throughout my session. It can be a little quiet between 1 and 2 on a Friday, and I welcome the days whenever it's not, trust me. But in between 2 and 3, we could have a pretty gnarly rally. Okay. And by the way, I mean, you want to talk about one heck of a bear trap this morning. You had negative 1,000, you had negative 1,300 ticks, you had negative 1,500 ticks after a quiet, slightly positive overnight and opening move. So you have people, this is what trading's all about, folks. It's being early to the party. And right here, if you were to say, oh man, this thing's tanking, I'm getting short, and by the way, this has already happened within a 10-minute span, and you're already back to your, market opening levels right there. If you're trying to be short and you're thinking that this is going to continue and you're still in it, you're either, okay, maybe you took a little bit of profit, or you stayed in it too long and now you're feeling the pain of this. So the big question is are we going to break higher? And we know some very, very specific levels above where we're at now. What are those? Glad you asked. So what you have from yesterday, or you could just say like the overnight high, and the overnight low we know is already like 4,500. Overnight high off of a Fibonacci is 45.32. That's 7 points higher from where we're at. Like I said earlier in the beginning of my session, I do think that we have room, and just being kind of a Friday, get a little bit more of a stronger rally. And I don't mean like from 2 o'clock to 3 o'clock straight up. I mean maybe choppy, slow grind into about 2:30. Then, sometimes in this kind of market on Fridays, you can just get those rips, in the last 20 minutes of the day. And I think that's kind of what this smells like, what it looks like to me. If that makes sense. But, it's our joy and it's our job to guide the process, create a narrative as to what makes sense based on our experience and our indicators, and also just, conceptually what has been happening on Friday afternoons. What has been happening on Wednesdays? What is, like what's the movie per the day that keeps on replaying? And you can argue now, since we're above 4,500, which was a major line in the sand, by the way. I know that Neil probably covered that as well with y'all. This to me leans bullish into next week. Hence why I put on those positions. All right. So I can cover a lot of ground in a small amount of time. And for now, that covers the S&P. I really wanted to dip our toes into commodities just a little bit. I am a little bit of a, I don't know, I hate the word history buff, but kind of just a history nerd. Let's just call it what it is. And I'm thinking, I'm like, okay, well, wait a second. 15% of the world's calories comes from Russia, by the way. It's called wheat, W-H-E-A-T. Neil has been nailing wheat. And now they're not exporting wheat. Yeah. There's a story behind wheat right now. And, you know, you can choose to kind of see which side you want to, what perspective you want to take. It's like, you know, are we going to have famine and hunger and all that kind of stuff? You know, that's inevitable, but that's not the topic. The topic is concerning commodities. What's the price of wheat in the future, right? What is going to happen whenever a major exporter of the world's calories no longer does that? And the planting season is now. Planting season is actually this week for wheat in the world in general. And they're not doing it. So then this takes me down commodity lane. And I go, you know, what do you want to do? Do you want to look at wheat futures or like a wheat ETF? Let's just start with wheat futures. Why not? So here it is, a daily time frame. You can obviously see this insane run up that Neil was all over, by the way. I caught a little bit of it, but not as much as I wanted to. And so this preps us for the next scenario that could be happening. And what is that? What it is possibly in the short term, making a little bit more of a dip. If equities go higher, I don't know how I don't think it's going to safely correlate 100% that wheat just goes down. Obviously, that's not the case. But what I am thinking is if we can get some type of pullback, whether it's through wheat futures or WEAT, then I think that is one heck of a good trade that's teeing up for all you traders out there. And what I'm going to try to do is sell some deep in the money put credit spreads on WEAT, and then with wheat futures, you know, I'll be at least at the least looking for an entry around 1,057, 1,050. It's kind of weird because if you use our quant pivot levels, these are the red and green lines that are the small lines right here. These are levels that the AI algorithms focus on. They focus on price. Learn more about these quant pivot levels in our store if you want. But what I'm looking for is maybe a retargeting of, and it's ambitious, but like, you know, at least a 1063, 1060. I said 50 earlier, but at least to revisit one of these snow lines. But, you know, anything could happen and this thing could just continue to take off. I'm also hoping that if we do get some type of pullback, okay, then we would actually eventually have some type of compression. In other words, that in the future, a squeeze would be forming here. Now, if you go from the daily time frame down to the hourly, you will not see anything that that translate to a bearish situation. Because why? Well, because you have an hourly squeeze that's trying to fire to the upside. You have 10x bars with those beautiful pink dots, okay, and a geopolitical situation on the other side of the planet. From me, I mean, I'm in Texas. So that's the situation with wheat, and that's what I'm looking for. I'm hoping, I'm praying that we can get some type of pullback. If we don't, then I think I'll still be able to engage. I'm just, you know, maybe it'll be a little bit further out in time. But these are positive ticks, and I think getting past that 130 print for the afternoon, which is exactly where we're at. Let's see if we can get an afternoon bid. We'll take it right back to the 10x bars and the 3 time frames that I like to use. And if you're long, if you've been long since, earlier, you're right. You're right. And, the great thing about trading is whenever you're right, you let your winners run. You let your winners run. And I think there's a lot of potential in this afternoon close, to be honest. Maybe above 800, 14,800. So hey, Al in YouTube. Hey, what Neil was talking about on Thursday that may have a pullback in wheat. I'm sure it was something good. I may have missed it. It may be, let me check my federal calendar. And just check that for you. Next Thursday would be the 31st. Oh, quarterly. Maybe he was talking about quarterly rebalancing. That may have been what he was talking about there. So March 31st, we have commercial paper, factors affecting reserve balances, selected interest rates. Yeah, maybe there was something else that he had, but I mean, I didn't hear what he said, but I'm 99% sure he was talking about commodity rebalancing or futures rebalancing for quarter. So, and like I said earlier about my little diatribe on the wheat situation in Russia, this is a big week for, a 90-day supply of food for the world. I don't know if y'all know this, but our international food system is based on a 90-day program. We have to be producing enough food for 90 days. I mean, that's the entire, if you want to talk about an agricultural complex, it's based on, I mean, it's not based, but it's a 90-day supply. And so, if you're talking about a planting report, get your long positions on now, I guess. I'm going to be careful with how I deliver that message, but if we're not putting the seed in the ground, the price goes higher, right? And guess who's buying up as much as they can? I don't know if you know this, but Texas had one heck of a winter storm last year. And what did everybody do? Everybody freaked out, started buying a bunch of stuff that they now, look back now, it's like they didn't need all the toilet paper, they didn't need all that stuff. That's just the madness of crowds, right? You had China sanctions, you had disruption, supply chain disruptions, Evergrande, all that kind of stuff. Gets everybody out freaking out and going out and to buy all the things and extra for the future. Well, what drives price higher? Supply and demand. Who do you think is going to buy as much as they can so they're making sure that they can stay safe and fed? Well, it's not an attack on the establishment or the 1% or a type of globalist situation or anything like that, but it is a situation where if there's a lack of supply and there's a limited number of buyers and there is demand, then we're going to see, I think that was a warm up, what I'm getting at, for what we have just seen in wheat. I look at that the same way I look at gold versus nickel. If we're going to be continuing on our path, we need every nickel mine open on the planet if we're going to make a EV revolution or anything like that. So it's weird. We're living in some very strange times. We're living in the fourth turning, if you've ever read that book. And this is the longest and the hardest of all the turnings. And what that means for any futures traders out there is we can take advantage of this. We can know the landscape and we can be ready for it. I like to follow nickel and palladium and platinum and a little bit of the metals. Gold was kind of just like, sometimes I just kind of ignore her. But you know, I was trading Alcoa, catching the move on this thing. This is aluminum, you know, 74 up to 98. Gold and silver, it's like, okay, fine, we get it, but it's kind of a heartbreaking. It's a heartbreaker. I'll look for another setup at another time. I'm not really focused on gold right now, but really the big movers right now, are the big things to focus on are food supply and energy. We're there. It's a little surreal. Okay. So I was talking about that wheat ETF a little bit more, just to check in with the S&P and the NASDAQ real quick. Everything's looking pretty nominally higher. The advanced decline is still, neutral. If it goes negative and starts to puke, I mean, that's not good at all, but I don't see that happening just yet. Looks like we're trying to inch our way back into 45.40 and higher. That's what the market looks like it's trying to target. Why? Well, it's just, sometimes it's not so much about indicators and fancy language and all this kind of stuff. Sometimes it's just kind of like what it looks like. Why are we doing this? Why is this happening? We're about to trade sideways for a little bit, probably in between 2 and 215. So you have new high, new high, new high, new high, all the way from 1030 here. And I could draw like a tiki Hawaiian guy with the bear's tombstone. Meh. All right. So what that looks like is 14,000, possibly. If the NASDAQ goes positive, then 14,800 is certainly doable. Like if you were long right here, right now, your least conservative target is still reachable. And the only thing that's going to put a damper on that is going to be a non-eventful close, which would just be, I mean, I love watching paint dry, but not that much. Susan, hey, thanks for joining us this afternoon. Are the 10x bars different? 10x bars different completely from propulsion dots? I've never used this indicator before. Yeah, they're different. But I love the propulsion dots too. Are you kidding me? So it's all good. I always say, like, look, if you're a new trader, one of the best advice that I ever got was, if you feel like you need to get an indicator, do some research on it and what it actually does, what it means, and does it fit your time frame of trading. Once you've cleared that, narrow it down to like 3 or 4 indicators, focus on one, get one, trade that for 6 months. And I say 6 months. I know that y'all are a bunch of brilliant people. I know that traders are generally extremely brilliant people. Okay. I know it may not take you 6 months to get in touch with your indicator. Might take you 3, might take you 2. But, I think there's a lot to be said for taking longer than you think you know. So you can really, it's a process of graduating and evolving and leveling up. Yeah, do I use every indicator that I could possibly, that we probably use here at Simpler? Sure, but it's just because I love what I do and I love playing around with it. And at the end of the day, it's not the indicator that makes you a successful trader. It's the indicator that helps you confirm some things and create a narrative and what makes sense. It's not what makes you a successful trader. It's extremely helpful, but it's still not the it's not the thing. Okay. Like I said, I just can use every indicator under the sun because, I mean, whenever I was just getting into this at way early age, much younger, I was like, what are all these cool indicators? Oh, you mean I can actually get really good information, define my risk still, not put my account at crazy risk and have a little fun doing it? So, you know, what I had to do, I mean, it was a tough process. I've narrowed it down to this workspace, but I can use Propulsion. I can use Darvis. I love Ragi. She's amazing. I can cross over into a little bit of Big Bad Voodoo Daddy, David Starr's Voodoo Lines. I can jump into the 10X bars and the Squeeze Pro. I can jump into John's Quant Pivots. It's fun for me. I see how it helps me, and I kind of shy away from maybe things that just don't really help. And whenever our 10X bars came out, my office used to be basically kind of just literally in the same corner, but across the hall from John's. And I started, it was the first week I was using the 10X bars, and I'd be, you know, celebrating after being in and out of trades. Like, John, why didn't we come up with this 5 years ago? I've been trading with the ADX and the DMI way too much. It was a week of celebration. I was like, oh, sweet. I can finally use something on a smaller time frame, look at a color, see how easy it works, create a correlation between the 1, the 5, and the 15, see if it makes sense to go long or short. Boom, put on the position, put on your stop, let it fly. You grok with all the haters. Good to see you, Mark. So just a reminder, this is one thing that I like to look at. If you're on our YouTube channel right now and you know you're kind of on the fence of being a member or doing something like that, here's another thing that I really like to show people. It's very basic and it's straightforward, but it's really helpful. So let me get into that workspace real quick. Let's see. How am I doing on time? All right, great. 15 minutes is a lot of time for me. Y'all know it is too. So put call skew for hedges. This is kind of a major chart. And I don't feel like I pull it up enough. But let me draw another correlation for you. Trading is, for me, it's really kind of revolves around correlations to create, at least to start creating a narrative. Oh, hey, Orlando. Yeah, I'm familiar. TG is a good friend of mine. We used to share an office. The Moxie indicator. If I can comment my opinion, sure. Let me jump into this first, though. This is a put call skew for hedges workspace. Okay, what does all that mean? All right, well, if the put call ratio, this thing in the middle, is below this red line, which is the 10-period moving average, that's our first thing that we need to just know about the situation. Okay, and I'm gonna unpack the situation here. Right, and by the way, everything up and down correlates to the correct time frame all the way across. 228 down here, 228 in the middle, 228 at the top. Okay, the skew is at 135. Remember, 2020, 2021, we were way up here, 145, 150, 160. It was like, okay, when is this going to stop? Oh, wait, we're continuing to climb. The NASDAQ going straight up. Oh, it dipped down a little bit and it came back up. You're starting to see the correlation. But what was the put call ratio doing the entire time? Just slightly under, again, climbing. Look at the NASDAQ up there, slightly under. And whenever it pops above the 10-period moving average, guess what happens? You get a little bit of a dip, you get a little bit of a dip. Okay, now where does this take us now? Why am I talking about it? It's because we're under, again, the 10-period moving average. The skew is going higher. Anything above 135 is in play for a bullish continuation. Okay. This is another reason why it makes sense for me to see a little bit more of a sideways chop, but ultimately into next Friday, you know, at least in the S&P be at 4,600. And if I'm wrong, you can all point and laugh. We'll have a good joke about it. But here's the S&P, same thing. If you wanted to look at the same time frame, again, everything up and down translates perfectly. And this is the skew above 135. This is like normal levels. I mean, none of this right here of 2020 and 2021, that's not normal. This straight up is not normal. This is not normal. Okay. Now we're kind of back to, 135, 140, 150 range. That's your pre-2019 kind of levels. That's, a little bit more based in reality. Okay. SK, you don't understand NQ bear on daily, which is the right level to short NQ. No, bullish. SK, could you rephrase the question? I'm sorry. I think I get it. But if you're asking for an upside target on the NASDAQ, what I was thinking was like above 14,750 takes you into about 772. Okay, let's keep on rolling. Bring this up real quick. So the takeaway with the whole put call skew chart, that should interest you, or at least hopefully it gives you a little bit of an eye opener. I'm not trying to, I don't speak in declarative statements. I'm not saying that I'm right or wrong. It's just, I can only use what I've been using for a very long time. And if I'm wrong, I have to figure out how to pivot. I always say in trading, especially if you're a very, engineers, mathematicians, I know that's a stereotype, I'm sorry, but no better way of putting it, I guess. A lot of traders, a lot of people have to figure out the why. Like, why is this position going wrong? I did all this thing. I did all this stuff. I look at this. I look at that. Why am I going wrong? How about this? Get out of your position. Stop asking why. And come up with a plan that makes sense for you again. I can't tell you how many people I've talked to that have been wanting to be traders, and their questions are, Jack, why did I do this? Or why is this happening? Why is this? And I'm like, hey, it's the market. Explaining why to somebody, it doesn't answer any questions. So sometimes, most of the time, there's just not an answer. So the gift of being able to just pivot and not be emotional is a learned experience. Okay, so Orlando back on YouTube here. Orlando is asking about, am I familiar with TG's Moxie indicator? I am. I absolutely love it. I think TG is a great trader. And, I think that this market is tough to trade in for anyone. But I'm telling you, once you have a trampoline move in the elf toe and you have a setup for a long, I mean, it's pretty awesome. So that's what I think. And I like what TG does, because what he does, and what I was doing with moving averages, is comparing a small moving average with a larger time frame. You know, he talks about the hourly 50, the 1550, all that kind of stuff. That's a great way of compressing time to come up with a narrative. But at the same time, I mean, whenever we shared an office, did I lock him out of his computer all the time? Sure. Did I take his lunch? Yeah, took his lunch money too. You know, locked him out of the office, you know, all sorts of stuff. But Moxie indicator, good stuff. So, you know, it is what it is. You know, get a haircut, TG. It's funny because I was on a FaceTime with him yesterday, and I was the one looking pretty homeless. So, man, we've covered a lot of ground, and it is very quiet right now. And maybe we get one last push. I mean, what I'm doing is just kind of referencing. So I've got multiple screens in front of me, and I know y'all can only see one. But one thing that I'm focusing on right here is to see if this 5 minute drops down a little bit, down to about 45.21. Maybe worst case scenario goes down to about 45.17. That's your long entry for you long futures folks on the S&P. If you get it, you're lucky. I mean, check out this 10x bar screen on the 1 minute. We can change the 5 in the middle to the 3. Okay, now it's going to be oh my gosh, I love it. There's a squeeze on the sideways trend. Oh, I'm such a nerd. Excuse me, folks. I'm having too much fun. Yeah, 3 minute squeeze now. And by the way, the 15 minute has green 10x bars across. I wish this would have happened this morning, Lorna. You know? So it's not like we're having negative ticks or anything like that. But y'all just know Fridays, especially in this market, it can get completely nuts. So, you know, maybe there's a little bit more of a push higher. And look, we're making our, do you see now what I'm talking about, you YouTube people that are not Simpler members yet? Look at the 10x bars lining up perfectly with all these squeezes. Oh, you want more? Check this out. Let me zoom out. There's a snow line up here. These are the voodoo lines. 45, 43. Okay, 45.39. Okay. And that's a daily time frame. That's, you know, that's without the squeeze firing. Check out this hourly time frame. Does it not line up perfectly with the first level that I talked about from the beginning of the session? 45.40. This thing looks like it's ready to pump. This 1 minute here, green 10x bars, the reversion to the mean was holding with, I mean, just perfection. Okay. The 3 minute, that's cool, holding that first ATR. Okay. The 5 minute in the middle, you know, there's nothing special in the squeeze histogram, but I think it's special that the 5 minute will hold the first ATR. This thing's about to go. Especially if this 1 minute starts to, oh yeah, check it out. Right as I said it, the micro squeeze, that black dot, I was about to say, if this turns black right here, that's a little bit more confirmation for me. And, you know, of course, like, look, I love the voodoo lines and the Ready Aim Fire Pro. So, you know, we can kind of go over to that and I can show you a lower time frame. I wouldn't be surprised if we have some type of like 5 minute major Ready Aim Fire buy signal. Boom, 10 minutes ago, we had one. Look at that. The 30-minute chart on, oh, I need to change that from crude to the NASDAQ here. I mean, look how uncanny. This is a major Ready Aim Fire buy signal right here. Make that up right there, 14,000. Okay, fine, 700. Let's just. It's beautiful. I mean, this is better than a double rainbow. I'm freaking out, man. I'm just kidding. He can't pull over. He's already pulled over. That's a funny movie. I was telling my nephews about how they have to see Super Troopers. Probably too early, but you know, they'll live. Oh, awesome, Orlando. Yeah, no, I've taken trips around the world and they've been extensive. And the only place that was really not in line with my line of travel was getting to Mexico City, and I really want to go. I've been everywhere in South America, surfed off the west coast of Chile, gone into the rainforest with the shamans, and I have to find like 2 or 3 activities to do whenever I go to a major city outside of the continental United States. So I'm trying to figure out what would do in Mexico City, except for eat amazing food. So, I mean, we can, anybody and everybody, if they want to have a spiritual experience, they can go to Chiapas. But I want to go to Mexico City and enjoy the sights. All right, so we're all pretty clear on like what's happening right now. Let me go back to those 3 time frames since we're just kind of tracking the progress of the S&P moving higher. Everything looks pretty solid here. Again, like the NASDAQ, if it's not going to be heavy and it's going back to neutral territory, that is a huge positive for everything else. The market, whenever the NASDAQ is heavy, for all you new traders out there, if the market seems heavy, specifically the NASDAQ, then it's really hard. Like it's a difficult thing for me to come in and try to buy it unless there's been a giant flush, which I will come in and buy. So, man, we covered a lot of ground today. And there's just been, it's been a wild week. So, it seems like there's going to be a continuation. I don't really know what's going to happen right as I sign off here at 2 o'clock. Okay. So with that said, I'll sign off, but I love doing these sessions. Join us on Monday and Tuesday, to view simpler options and be a member here. We're trying to shorten your learning curve, right? So, we've got all sorts of perks too to being a member as well. We've got a raffle going on. We got all sorts of cool stuff going on. So we hope that you join us. You'll have a great weekend. Get some rest. Get away from the markets. Go out in nature. Be alone for a minute. And if you need a full-on reset, more nature, more reset. All right. Well, we'll see what the S&P does into the close, but it sure does look like we made some good progress. Slow, but still good enough progress from 1 o'clock, from that 44 kind of 20 ambiguous area. And now we just kind of wait on the 15-minute and the 30-minute, see if that continues to fire to the upside. All right. Thanks, everybody. We'll see ya. See you next week.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how, and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Hey traders, Raghi here. Let's get a quick audio and video check in. Should be good to go. All right, great to see everybody. Happy Friday, everybody. Last hour of the trading week. Of course, that means it's time for our Ask Me Anything, our AMA session. This is the ideal time to ask those questions that during the more actively traded hours of the week, you have questions, whether it's strategy, settings, indicators, whatever it may be. Of course, phone lines are open for your request. We'll go ahead and tackle those. I had a few questions that were sent in already for Ask Me Anything, and I thought they were really good questions, and you'll see them across the top there. So I thought I'd tackle those with you all very quickly. The first one was, what do I trade my options in? Broker and what type of account? For the most part, gang, I like most of you, I would imagine, still use a account, so Thinkorswim. I have some others I've been testing, but still most of what I do goes through Toss. And usually I try to test one brokerage maybe every year and a half. So, but still very much a cash account. Why a cash account? Gang, I don't trade spreads. I have on and off throughout my 30 years. And for the most part, I definitely prefer just straight up calls, long puts, period. And so that, in addition to liking to trade the zero-dated options, Monday, Wednesday, Friday, and even the Wednesday, Friday options on Tuesday, Thursday, I don't want to run into a pattern day trading headache. Easiest way around that for a long call, long put trader is to work it out of a cash account. So that's the first thing. I just do everything out of a cash account. All right, the other question, volume ledges. What the heck is a volume ledge? All right, I'm actually, I'm grabbing my my prickly mat. I think I'm going to stand for our Ask Me Anything session. Ooh, there we go. Got this prickly reflexology. It's like better nails. Woo! All right, so I got that and a can of Jocko Go. So anything could happen in the next 56 minutes. Okay, so as far as volume ledges, what the heck are they? I'm being pretty literal when I talk about a ledge, meaning just something that if we were scaling a wall, scaling a mountain, scaling a cliff, what could we hang on to? And this is, and for those of you that are wondering, I'm sure many of you are used to the volume that's based on time or a date, right? We're used to volume ledges or volume read. Where are my drawing tools? There we go. We're used to volume in that more traditional way, sitting down here, right? We're used to that. Gang, I don't give a rip about that. What day we had volume falls a distant 402nd to what price we had volume at. What price are there specifically higher volume amounts? So that's what a ledge is. It's a price-based volume. If you're already a fan of volume profile, if you already, for example, took my submarket sonar class, if you're already using tools like VWAP or even my V score, you already are accustomed to the edge that sub-market sonar, that sub-price view of, hey, what's the volume associated with that price? You already know. So this is a free tool within TradingView. And then LornaBot, do we have that layout in, I know Lorna cooked up and you all have that in the room drive, okay? So it's a feature within TOS. A lot of get this on TOS. I mean, I get that you love TradingView and you practically write poetry to it, but we're on TOS. What can you do for us? It's in the room drive. Open up that folder. It looks like a half-open manila folder, and you are good to go. And if you don't know what a room drive is, no worries. A little treasure trove of awesomeness in the room. So if you're looking at the layout, I just put a screenshot up there. If you're looking at the layout, alert section, chat section, screen view, big yellow arrow, drive. It's called the TOPS 3-panel layout. All right. Okay, cool. You know, if we're going to talk about the markets, I'm going to do my best, especially when I can get free tools to you all, so that we can all look at this thing in a similar way. All right. So, okay. So there you go. So that's an updated, upgraded view. Okay, cool. So that's volume ledge, price-based volume, pretty much the main type of volume that I look at. All right. So then yesterday after our Q&A session in all the rooms, somebody asked me, Rod, what's scalable? And, you know, what's this scalable thing you're talking about? Because somebody was asking me, hey, Rod, I have a, you know, $1,000 account, or I have a $5,000 account. Can I do this? This is what I will tell everybody, gang. If and when you have a smaller account, small, medium, large, Godzilla size account, I think a lot of traders wonder, and somebody asked me in an email, and I thought it was a great email, Rocky, do you trade differently than when you first started? And if you don't mind me asking, how much did you start with? I started with $1,500 and I was 15 and a half. I was trading commodities, right? And, you know, luckily I had a very supportive and understanding mom, still do, and who was already into the market. She was already studying the markets, and she didn't know it back then. But back in 1986, she was already doing some market timing. She had just sort of anecdotally realized there were rhythms to the market. She wasn't reading technical analysis. She wasn't reading IBD. She wasn't reading WSJ. She wasn't watching television. She was just noticing that there tended, you know, when she was looking at the holdings that we had. And I will tell you, gang, the markets, you all learn. Actually, what you are learning is a big deal to me because I know what the markets did for my mom. I know what they did for me. I started trading about 3 years later after my mom started getting in markets. So the reason I say it's a big deal to me is my mom was 40 when she was widowed. My father passed. And if it wasn't for her ability to be able to take the sum of money that she had and grow it, you know, I don't know, you know, where any of us would be. So I'm very grateful to the markets. And I want you all to learn how to do this. You can do this, right? So anyway, tools that'll help move the needle. That's what all of us here want to do. All right. Anyway, enough storytelling. So what's scalable then? I want everybody to be able to do this, meaning what you have to be cognizant of is how much money do you have now and how much can you risk of it without losing half of your account size, because that is risk of ruin. Is not a blown up account, gang. 50% is. Recalibrate that. If you have a $10,000 account and it is 5,000, whatever you are doing, stop it, right? One of two things are probably happening. It's actually a really easy fix. One of two things are probably happening. Either you're trading too big, so it's a position sizing issue. You're risking too much, which could be related to position size or where your stop loss is, right? Or you're fighting a trend. It's usually going to be, of all the traders that I've helped over the years, it's usually one of those three things. So why not start with some of the more obvious issues, okay? Scalable trading is really rooted in, regardless of your account size, if you think about the cost per trade and position accordingly, yeah, you can use almost any size account, but you're going to have to be discerning. Meaning, some trades are simply going to be unaffordable. They're going to be too expensive, right? We can get into that another time, but yeah, that's what I mean by scalable. Yes, you can have a large account, small account. When I first started trading, I traded knowing I had a small account. Fewer positions, more conservative levels, right? Fewer contracts. As my account grew, I did not change the way I traded, gang. I just traded more contracts. So I think traders think, well, Rog, if I go from a $10,000 to $110,000 account, I'm trading differently. And my answer is no. Same indicators, same tools, same strategies, same setups. You're just buying more. Once upon a time, I day traded with 2 contracts. Now it's nothing for me to day trade maybe 12 to 20. That's scalability. Same setups, same markets, just more contracts. Okay. All right. So I hope that helps. All right. The other question I had a lot of was gold. So let's dive into the charts. Enough stories. Okay. Gold. Do I want to be long gold? I want to continue to look for opportunities to get long gold 100%. Now, gold moves inverse to real yields. Real yields, the nominal yield of a bond minus the rate of inflation. So as long as we see real yields moving for the most part lower, right? And I'd say real yields are pretty choppy at the moment, but as long as they're moving sideways to lower, we can look for opportunities to buy gold. But I'm going to tell you, the timing has to be really specific. What level am I going to look to buy gold at next time? Most recently, we bought gold in here, right? We took some profits out yesterday. We'll see high as high. But the next level that we want to watch for gold, I'm going to move this right here if I can. There we go. I'm going to move this. The next level is likely going to be in that area right there. The volume ledge, you can see that right there. And it's the very top half of the wave. And we're getting to more of a double green bullish momentum, bullish trend. So that's the zone that I'll be looking at for a pullback buy. It's actually a little narrower than that. So no green over green market structure. Boom. I know I've got some participation. There's participation, there's attention. And that's what we're looking at going into next week. I want a little bit lower low. Whatever was going on in here. Yes, gang, if we can short the rip, we'll do it. I don't have a level that I love on ZB or ZN yet, but what I wanted to remind my non-futures traders is that, of course, most people know about TLT, but I'm playing the 10-year a little bit more than I'm playing the 30, and that is IEF. We want to get long puts in IEF. All right, one of the things that Lorna, I think you all, there was a group in the mastery that said, hey, we're going to start getting long puts. And I think it was you and Nick, right? Yeah. So it was not a mutiny, but yeah, it was kind of great. They said, hey, Rod, we're already long puts in IEF. So gang, we want to keep looking for opportunities. How about we jot this level down? 109, 109.20. I would keep that level in mind. We got a volume ledge there. Look, gang, I know it seems like so far away, but it's amazing how often, just when we think, oh, this is never going to correct, it does. And you know, as a trend trader for pretty much my whole life, I do believe that healthy trends correct. I'll just have to wait for my pitch. But I do want to be long puts and TLT and IEF, especially, or short ZB and ZN. All right, last question that I got via email for Ask Me Anything Friday, and thank you for those of you that did shoot those over to me. I want to be focused more on oil stocks than oil. Now, we already have long positions in IEF. For those of you that know and have the layout that I've shared with you, you've seen the green grab candles, you've seen the bullish Momo and the bullish trend. You see the green and all that come together. You see it dip into the wave. You know where we got from. March 15, March 16. I need another move like that to get us long. And that's okay. We'll wait. You know, how many folks thought here, oh, we're never going to get a pullback? Sure enough, we did. So remember, healthy trends correct. And we tend, so far in XLE, we've got about one a month. We had one in January, we had one in February, we've had one in March. So yeah, you better believe I'm looking for another one in April. So yes, I will be waiting for another pullback. One of the reasons I'm more interested in XLE, OIH, and XOP is because if and when we get that Ukraine pullback, when everything sort of starts to settle there, crude could get rocked. Oil stock should stay, relatively speaking, stronger. So I'm a little less interested in USO, a little bit more interested in the ETFs, XOP, XLE, and OIH. And then remember, gang, the stocks within them. All right? The stocks within them. So definitely, I want you all to think a little bit more about oil stocks. And for those of you wondering, and if you are, hey, kudos. Rog, I keep hearing this. Gang, don't worry about backwardation as it applies to oil stocks, because even when you get out into, I believe, September, last I checked, we're still in the mid to low 80s, even despite the fact that further out. So for those of you wondering, Rog, Technobabble, what the heck is backwardation? Taking delivery on crude today is more expensive than taking delivery on crude in, say, September or October, okay? So at those levels that are going lower and lower and lower as we go through the year, oil companies can still be wildly profitable at these levels. So we want to focus on the oil stocks. All right. So that's what I'm focusing on there. All right. Another great question here. Diane's asking about FX. So I'm going to talk about the US dollar here. Okay, yeah, let's move on to US dollar. Yeah, I love that. US dollar. So, and what are my what are my settings on TradingView? I use 100, so it's pretty easy. I'll show you here real quick. I use 150 on the row size. Okay, for those who want to recreate the way mine look here, I use 150 on the row size within TradingView, and I make all the colors, up volume, down volume, value area, everything's gray except for point of control, which I make a nice crispy white. So it stands out. That's it. That's it. No magic there. Okay. So US dollar, Diane, the way that we're playing US dollar, and this is an open position that we have right now, is getting long the euro. I don't want to get long dollars directly because there's no way to actually play US dollars only. In fact, when it comes to currency trading, there's no way to do that. It's always going to be a group of currencies or one currency against another. So somebody might say, well, Rod, what about UUP or dollar index futures? That is a basket of 58% euro and then fairy dusting of a bunch of other currencies. Why not go straight to the most negative inverse relationship in any market? And that is when the dollar zigs, the euro zags. We will short the rips on the euro. And that is basically your long US dollar positions. We want to do that via my futures traders, 6E shorts, right? And long puts in FXE, which is an open trade that we have right now. From that, well, you guessed it, March 17, that's what we're looking at that, okay? So Diane, great question. That's how we want to play the dollar. All right, next question is what's going on with Natty Gas, the Widowmaker? Sure. So we've got a long Natty Gas position, not because of Ukraine necessarily, but well, mostly because of two things. One, we're north of the 200 propulsion, which is the 200 exponential moving average. It's actually an 8 EMA that crosses with the 200 and then interacts with the price lows. And I call it the equator. All right, that's a free tool, gang. It's already built into the layout that I give you all. North of the 200, expensive because we're long calls. We have our risk defined, and so today we actually took T2 out. Now, so we had T1 already. Now we're at T2. Now we're going to just start trailing a stop, and I like to call it a safety net. We're just going to put a safety net underneath this thing and just sort of trail it up. And you'll see I usually have just 2 charts per screen, right? Usually I have just 2 charts per screen. So that's one of the other reasons I like having quite a few screens. There was a time I could put 4 on a screen. I just can't see as well. When I was 25, 35, it was nothing to put 4 or 5 or 6 charts on a screen. Yeah, now 2. You got 50. Yeah, now 2 is where I'm comfortable. So it's just on another screen, my friend. If I got you an indicator, believe me, it's still somewhere on one of my layouts. It just may not be on the one that we're looking at together on my desktop. All right. And as far as where that layout is, you all, it's in the room drive, gang. Lorna has updated my free layout. So in the options room and the futures room, you have that free layout. My mastery folks, you have a slightly tweaked, upgraded free layout with the tools included with the mastery. Okay, so just head up into the room drive, and that TOS layout with the indicators and my settings are good to go. So if you don't want to use my layout, no problem, because when you import in that shared item, it's also going to import my indicators and settings. So it just makes it really, really easy. Okay, next up is, hang on, gang, bear with me here. Let's see. Questions. Where does the dog win at? Dog usually, actually, she's in here right now. She's on her doggy bed, all curled up. In about 5 or 10 minutes, she's going to wake up because she's going to want her dinner. But yeah, she's in the office, sometimes under the desk if it's thundering. But yeah, she's in here today for the Friday close. Okay. All right, moving on. Look, if for those of you on a laptop, I might actually have my laptop rig on here somewhere. Because one of the cool things is that I have 3 portable monitors. So if you're on, I think I might have my laptop rig on here. Yeah, if you're on a laptop, gang, you can have monitors and I mean nice size ones. I think I have 2 17-inch portable monitors. I'm just scrolling through my Insta because I think I've taken a screenshot of it. Where is it? My motorcycle helmet there. That's not going to help us. Let's see. Well, anyway, yeah, it's somewhere, but yeah, you can go get AOC makes a really, really good one. AOC, it's a, do I really not have those darn monitors? Anyway. Yeah, it's you can get these portables. Oh, there you go. This is me broadcasting from San Francisco. I think one of our mentorships. So there's my laptop. That's a Surface, and there's those 2 monitors. They're pretty good size, right? That was 2 out of 3 of them. So there's my mic. This when I'm on the road, that's how that's the edge of the bed. That's the footrest thing. So you can absolutely run a pretty able multi-monitor rig from a laptop, and a Surface is not a great unit for that. And you can see I'm running 2 really nice 17-inch AOC monitors. I think these things cost me $120 or $150 each. So they're pretty affordable, and they come with their own stand. So I know these are all things we have to think about when we're trading, our rigs. So anyway, I hope that helps. All right. So next up is, hang on, gang, let me catch up with some questions here. Bear with me. So at what point am I no longer bearish the NAS? Sure. So again, I hope that we've covered, I really don't care where the NAS goes next. I'm not bullish, right? I still think it's already borderline overbought, but I really don't care where the NASDAQ goes because most of my focus is on names like XLC and CLOU, which is coming down nicely off the 55 propulsion and a pretty beefy volume ledge overhead. Perfect. That's what I want to see it bonk its head up again. However, if we close above the 200, I have to consider that this price action has at least made it into the bullish hemisphere north of that 200, and I won't look for a lot more by way of shorts. But we're not really looking for on the Qs anyways. I'm far more interested in shorting XLY, XLC, and those weaker stocks within them. So what we've done is we've taken the NAS, broken it down into 3 cylinders. We know that one cylinder, the XLK, is firing, but the other 2 aren't. So the NASDAQ itself is sort of limping along, but making progress on that one cylinder called XLK. That's Apple and Microsoft, by the way. XLC and XLY, that's where I want to think about the shorts. So I'll be straight up. I really have less and less vested interest, Randy. And so therefore, since you're asking this from the mastery, you know how awesome it is to sit and say, Randy, we don't really care where the NASDAQ goes. Not really. We're free of that. And then notice the rest of our book is much more geared to the inflation and the narrative in oil, inflation and the narrative in Brazil, copper by way of Freeport-McMoRan. See, if you look at our current book of trades, you'll see that I really don't have a lot of exposure to the broader indices directly, right? I think XHB is probably our largest ETF position. And what is this? This is taking advantage of the fact that mortgage rates are going up and home builders and construction are moving lower. That's a short we have on as well. So you notice we're kind of navigating around that stuff, right? And that's what I'm going to continue to do. Because if I don't have clarity, I don't have an edge. And if I don't have an edge, I'm not going to put my capital in harm's way. I don't hate my money, right? We don't hate our money. All right, so hang on, let me keep up with some questions here. Thank you for your patience. I bet it's never cold in that room. Yeah, luckily they're not CRT monitors like they would have been 20 years ago in here. Then this room was quite the sauna. And now, yeah, these new monitors put off almost no heat. Yeah, none. So it's not too bad. It's not too bad at all. What platform am I making trades on? Patrick, I usually try a new broker about every 12 to 18 months. Toss primarily, and I'm checking out Tradier right now. Because one of the things that Tradier is going to allow me to do is automate what I do with Wingman Tracker. So when all this gets put in the system, and I'm tracking my trades and showing you all what we're doing, and when we have our kind of breakdown of trades, I'm looking for something that automates it, and Trader looks like it should. So I'm kind of in the process of testing that right now. But Toss is still my primary platform. All right. What is that baseball book that I like so much, Benjamin? It's called The Mental Keys to Hitting by H.A. Dorfman. Love that book, The Mental Keys to Hitting. If you like baseball and you like the analogy of us being batters, the market's the pitcher, and what is the mental sort of game that we're playing, yeah, I love that one. I love that one. The Mental Keys to Hitting. Yeah, iCup, I don't know how big a desk. It's a big one though. 9 foot, no, I think it's 7.5, maybe 8 feet. About 8 feet, maybe? 8 foot desk. Okay. Next up is, bear with me, gang. I'm just kind of, as far as some of the specs on the computer, gang, I am lucky enough to have that big, awesome brain of our very own Daryl spec my stuff out. So if you have a question, I think Daryl's in the training room sometime. I can't remember. Sorry, I don't recall, but yeah, ask Daryl because he spec'd that out. It is a Falcon computer. It's a 52T GT, something like that. It's at the very top. It's at the very bottom. It's something in the middle, and it works great. And he took care of the specs on that. So he would know far better than I about that. I just do what Daryl tells me to when it comes to computers, for sure. I'm always bugging him with some tech issue or other. He and Lorna, I just bug them constantly. All right. Bear with me, gang. As far as re-entering trades, gang, we just need a new setup. So for those of you asking, Rob, when are we going to get back into UNG? I need a pullback. When are we going to get back into XLE? I need a pullback. In the meanwhile, we're just managing the open trade that we have. I do not, quote unquote, add to trades, especially when they're making higher highs. Okay, never going to do that. Do I like Nike as a short? Quantum Sense? I do. We've played Nike as a short. That is the volatility of earnings. I do not do that. So we need to get out, right? We need to get out, or we need to wait. Oh, you want to get up? Hang on. The dog's all excited. I don't know. Hang on. The daddy's home? Yeah. All sorts of excited? Yeah. All right. Go on. I know. You're so excited. Go on. All right. The puppy's excited. The daddy's home. All right. So as far as those USB monitors, yes, they are. All right. So do I want to get back into Nike? We've got past the earnings volatility, and yeah, likely, and you're going to see exactly where we're going to do it. Bam, said the lady right there. We're going to look for that, likely to get tested. The only issue is I'm going to have to be a little bit more conservative on the zone because this is clearly still bearish. Oh my gosh, right? We have 2 blue grab candles, 2 neutral blue grab candles. Hardly enough for me to say that the bearish sentiment is gone, right? I mean, we had a bounce. This is a downtrend bounce. And so we respect the trend that was. So yeah, I'll be looking for that Nike short. And again, it's one way to take advantage of weak names at the equator, at the resistance and XLY. But please remember, there are better downtrends in that tide. Starbucks, TJ Maxx, there's a number of them that are better looking within that tide. But yes, Nike is absolutely a valid one. Okay. Can you use an 80-inch television as a TV? Yeah, you mentioned Ask Daryl. Yeah, I know that some people do. I imagine you could. It probably just needs some adapters, but you might want to just send that into customer support and they could run that by Daryl. Yeah, will we get another opportunity at Starbucks? Be salty? I think we will. Just got to wait. Now, there is an aggro zone right now. There is a really aggro zone right here at the volume ledge. So it is sort of tempting. It is a little tempting. Just not yet. What do I think about Amazon? I think it's the #1 weighted stock within XLY, but there are other better things that I would focus on short within the XLY. But I will say Amazon this is the 200 right here, simple. Here's your 200 exponential, massive volume ledges. Previous trend was mostly down. There's a really good argument that this is not an uptrend, but rather a rally into a ceiling. It'll be very interesting to see what some of these markets that have rallied hard enough to not just squeeze those shorts into oblivion, but possibly entice some momentum buyers, some bulls into the market. Gang, this is not an uptrend though. Not for me. It's a very choppy range with a lot of bullish momentum, but not an uptrend yet. Not an uptrend yet. Okay. Boyle. So this is the same analysis as UNG. I don't play the leveraged. I don't particularly like to, but it's the same analysis as UNG. So if you're looking at Boyle versus UNG, here's what I would say. If Boyle's getting your attention now, be careful, gang, because Boyle's already made a significant move. And again, you're talking to someone who's already long. So there's the bias of, why would I want to get in at a brand new high when this thing pulled back? And then this is the follow through. So I need another pullback, right? And then we could look for follow through again. But whether it's Boyle or whether it's UNG, I have no interest up at these highs, right? I'm not a momentum trader. Find a trend, buy the dip, repeat. That's it. That's it. So that's my advice on Boyle. Please be careful. We took our second target up here. This is T2, right? Look at where we've stopped before. Look at where we've had this kind of resistance. I'm not saying the trend is just going to get crushed. All I'm saying is this is resistance. Why not take advantage of some kind of pullback, maybe to a volume ledge? Yeah. So please, please, please be careful buying into higher highs within the context of a trend. All right. Those pullbacks do come. Maybe it's going to be a shallow one. If you're a fan of Fibonacci, pull a fib on the last major move. If this is the high to low range you can pull the fib from, go for it. It's interesting. The 382 and that volume ledge are pretty much overlapped. That's pretty, look at that. The 382 of this last major move and that volume ledge are right there. So that might be a really good level to keep an eye on for an aggro level entry. All right. So keep that in mind. And for those of you wondering, okay, JD asked, with us being short XHB, yeah, it's been a good week for us on that XHB short. And at this point, everyone should know, okay, Rod, got it. You're going to tell us short the rip. Hey, if I sound repetitive at this point, I have done my job. Okay. So with XHB moving lower, will I be looking for any shorts within XME? Ooh, well, I would not connect the dots between XHB and XME. I need a pullback on XME or SLX for that matter. But remember, we have our VALE long. This was one of the heavily weighted stocks within that group. So do I want to get any shorts in XME? Oh, gosh, no, I'm not even allowed, JD. Double green, not even allowed. But we will look for more short the rips in construction and in home builders. All right. Okay. So gang, it's 4 o'clock. Actually, it's just a few minutes after 4. And I hope our Ask Me Anything Friday was helpful. Thank you as always for all the questions. I know a lot of you tune in to Charts and Coffee Monday through Friday. I want to let you all know I've been sending out my weekly sector and macroeconomic notes to everybody Sunday evening. And then at 6 p.m. Eastern, we go live with our first show of the week, 6 p.m. on Sunday, right? So we got a Formula One race coming up, second one of the season, and we've got our show at the 6 p.m., all right? So, yes, how we prepare for Monday. Okay, yeah. So for those of you that are in the sector secrets mastery, how do you prepare? Patrick, pen and paper, my friend. It's going to be recorded. We're going to go through the watch list building process. So yeah, pen and paper, maybe some caffeine. Maybe it's caffeine. 2 p.m. on Monday. But again, Sunday evening. For being a part of the Simpler community. Thank you for supporting each other. Thank you for educating yourselves. Thank you for educating your friends of the next generation, because this is how we empower ourselves to take advantage of this amazing thing we call the futures market, the stock market, the options market. You all know my story. I know how much the markets meant to my mom, what she was able to do. So, this is a big deal to me that you all can empower yourselves and do this. It's not rocket science. It really isn't. It's a lot of discipline. It's understanding risk management. It's all the unsexy stuff that will get you there, gang. All right. Enjoy the weekend. Enjoy the weekend. Thanks again, gang. Take some time away from the screens. Be good to each other.
We're a trading community trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. They'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.